So yesterday we completed gratuity, right? Yesterday we completed gratuity. So we'll start with question number. We'll start with practical question on gratuity today. That is question number 4. We are on page number 47. Let's try to get into this question. Mr. Imran Khan retired on 31st January 2021. Okay. Mr. Imran Khan retired on 31st January 21 after working for 20 years and 11 months of service. If he is covered by payment of gratuity act, this 20 years and 11 months will be considered as 21 years. And if he is not covered by payment of gratuity act, this would be considered as 20 years. Yes? At the time of retirement, he was drawing a basic salary of 25,000. This was increased to 25,000 from 20,000 with effect from 1st August 2020. Meaning thereby, in the last 10 months, there was an increase in the salary. Therefore, last drawn salary and average salary are different. Last drawn salary and average salary would be different. Dearness allowance is 5,000 per month. 60% is eligible for retirement benefit. Means 60% is recognized, 40% is ordinary. And conveyance allowance is also 5,000 per month. He also received commission of 10,000 during the last 10 months at the rate of 1% of turnover achieved by him. So this is a turnover commission. This you can take into account for those who are not covered by payment of gratuity act. He was paid gratuity of 5,80,000. Compute the taxable amount of gratuity and gratuity exempt. So you have to give them two things. How much amount of gratuity is exempt and how much is taxable. You have the blank format of this question, right? Yes, case A is very clear. Case A, he is a government employee, so entire amount of gratuity of 5,80,000 is exempt from tax, right? So case A is clear. Let's move on to case B. What it says, if he is covered by payment of gratuity act. If he is covered by payment of gratuity act, gratuity received is how much? 5,80,000. Exemption is lower of following three amounts. Number one, actual amount received, 5,80,000. Notified amount is 20 lakhs. And the third amount is last drawn salary multiplied by 26, multiplied by 15 upon 26 into period of service. What do you mean by last drawn salary? Salary of the month immediately preceding the month of retirement. What do you mean by salary? Basic salary, DA recognized, DA recognized plus DA ordinary. What is basic salary last drawn? 25,000. What is DA recognized? 3,000. DA ordinary 2,000. So the salary will be how much? 30,000. 30,000 into 15 upon 26. Multiply by how many years? 20 years. $363, $462. The third amount is $363, $462. So what is lower? $363, $462. That would be exempt. Take it to the outer column. What is the taxable amount? Yes. 216538. Correct. This should be 21 years. 216538. Yes, is that very clear? Here it should not be 20 years, no? Rounded off to 21 years. 216538, is that very clear? Anyone if having any doubt here? Shall we proceed? Let's move on to the third case. Case C. What is the actual amount of gratuity? Five lakh 80. Exemption is lower of following three amount. Number one, 5 lakh 80. Notified amount is 20 lakhs. Then you have average salary into 1 by 2 into period of service. Salary means basic salary, D recognized turnover commission. You have to take average for how many months? Average of last 10 months. Now get me the average of last 10 months. What is the basic salary right now? 25,000. So this is increased from 20 to 25, right? With effect from August. He retired in the month of January. So January should be ignored. You go in a reverse order. December, November, October, September, August. So it is 25,000 multiplied by 5. Correct? Salary was 25,000 for 5 months now. From August to December. Plus, before that, it was 20,000. So 20,000 into 5. Plus, you have to take DA recognized. What is the amount of DA? 5,000. How much is recognized? 60%. Multiply by 10 months. DA throughout the year it is same. Plus turnover commission. How much? 57 is given. Correct? So get me the total. 25,000 to 5, 125. 20 into 5, 1 lakh. So it is 225. 225 plus 50. 275 plus 36. Sorry, plus 30. 275 plus 30 is how much? 305. Are you understanding this? Yes or no? Yes, get me the amount. What is the total? Three lakh 5,000, right? How did you get 255? Have you added turnover commission? Vidyashri madam, have you added the turnover commission? Who will add that? Three lakh 5 divided by 10. So you get the average of 30,500. Turnover commission is required to be added, na? So average salary 30,500 into 1 by 2 into period of service, part of the year will be ignored. So get me the third amount. It will be 3 lakh 5,000. This itself is the lower amount. So you should take this 3 lakh 5,000 to the outer column. This is exempt, so what is taxable? $275. Correct? Have you all understood this very clearly? Shall we proceed? Let's move on to page 49. Shall I proceed? Okay. Let's move on to this. Page number 48 in your textbook. Page number 48. Now listen to me carefully. Here we are talking about leave. Manoj has come. Manoj, very good morning. Is Manoj sleeping? Okay. Now, see, whenever employee will join an employment, he'll get an appointment letter. That appointment letter will clearly mention all the terms and conditions of employment. Appointment letter will have terms and conditions of employment. In that terms and conditions, there will be something called as terms with respect to leave. How many leave an individual can take while he is in employment? So there are different types of leave. One can be sick leave. Sick leave means if you have fallen sick, then you can take leave. They will not deduct your salary, they will pay you the entire salary. That is called as sick leave. Generally, it is 4 to 5 days. And you have to submit the copy of doctor's certificate. You have to submit the doctor's certificate. Another leave is called as casual leave. Casual leave means unexpected leave. Say for example, Ishwar has left home, he is going to office, and while he is traveling, he has got a call from his wife saying that my father is being hospitalized, so don't go to office today, come back. So Ishwar has called his boss saying that this is what has happened, so I cannot come today, I will have to go back. So this is the unexpected leave, casual leave. This is also generally 4 to 5 days. It all depends upon the employment policy of the organization. Whether they will provide you sick leave, whether they will provide you casual leave, it all depends upon the policy of the organization. Big companies, multinational companies, giant companies will provide. Small companies may not provide. Third leave is called as paid leave, also called as earned leave. Earned leave means you have to earn, also called as privilege leave. Our discussion right now will be restricted to this one only. Our discussion will be restricted to this leave only: paid leave, earned leave, privilege leave. Say for example, your appointment letter says that your paid leave. Paid leave means you go on a leave, salary will be paid to you. Also called as earned leave. Earned leave means you have to earn this. How you will earn this? by working for it. If you work for 1 year, your employer will give you some amount of leave. So this leave is also called as paid leave, earned leave or privilege leave. Everything is one and the same. Now in India, there is no such law saying that you should give paid leave, earned leave or privilege leave to your employee. Now it all depends upon the employment policy of the employer. Policy of the employer, and that will be clearly mentioned in the employment contract in the terms and conditions. In India, lawfully, no employer is bound to provide you any paid leave. Yes, in India, we have a maternity leave. In India, we have a maternity leave. So if female is pregnant, she is going on a leave, she can take a paid leave of 6 months. That is legally allowed. There is a law in this country. But there is no other law with respect to leave. So whether the employer will provide the leave or he will not provide the leave, it all depends upon the policy of the organization. Now say for example, your appointment letter says that if you work for 1 year, you can take 40 days leave. If you work for 1 year, you can take how many days leave? 40 days leave. This is what is written in your appointment letter. This is what is written in your appointment letter. Now say for example, Ishwar has joined the employment. He has worked for 1 year. So how many days will be credited to his leave? 40 days will be credited to his leave. So the HR team in the organization would maintain the detailed record with respect to leave. So if he has worked for 1 year, 40 days will be credited to his leave. So in his leave account, HR team will maintain the details of record of leave. In that, they will credit 40 days. Say for example, throughout the year, he has not taken any leave. Then this 40 days is a credit in his account. The way you open the bank account, you deposit some money, then you say this is the credit balance. Similarly, you have worked for 1 year, employer has credited 40 days leave to your account. In that case, we say that 40 days is a credit lying in your account. Say for example, Ishwar completed his chartered accountancy at the age of 23 years or maybe 22 years. Now he has worked with an organization for 1 year. His age is 23 years. He has worked for 1 year and 40 days leave is credited in his account. The organization in which Ishwar is working now, anyway, is having holiday on Saturday and Sunday. Saturday, Sunday, already he is having a holiday. So he feels that there is no need to take any leave. So he is just accumulating this leave. So he has worked for 1 more year. On the employment, he has completed 2 years. More 40 days will be credited to his account. So 40 plus 40, now he is having 80 days leave in his account. So if he wants to go, he can go for a leave for 80 days. Now say for example, he has completed 1 more year of age, working with the same organization 1 more year. So now he has completed 3 years working for the same organization. 40 more days will be credited to his account. So now in his account, the accumulated leave stands at 120 days. What can he do about this leave? What can he do about this leave? Possibility number 1, he can use the leave. He can use the leave means he can utilize the leave. He can go on a leave and his salary will not be deducted. Possibility number 2, if the organization does not allow you to accumulate the leave, say for example, organization says that we will allow you to accumulate a maximum 50 days of leave, that's all. In that case, anything which is beyond 50 days will automatically lapse. Lapse means it will get wasted. Neither you have utilized the leave, nor you will get the benefit of it. It will lapse. Third possibility, you are accumulating the leave for the future use. Your employer is allowing you to accumulate the leave and you have decided to accumulate the leave. So you are accumulating the leave for a future use. So right now in our example, Ishwar has accumulated leave for future use. To what extent? 120 days. Correct? Are you understanding this? Yes, yes. Darshini madam, second year, if Ishwar wants, he can take 80 days leave with salary. Third year, if you have not taken any leave till the end of year 3, he can take 120 days leave with salary. Correct? Yes or no? Okay. Now let's proceed further. Say for example, at the age of at the age of 26 years, Ishwar is getting married. Ishwar is getting married now. So he will have to go on a leave now. So he has taken a leave of 60 days. He has taken a leave of 60 days. Marriage come honeymoon leave. 60 days. So this 60 days will be deducted now. He is having best time of his life. He is going to get salary for this 60 days also. After utilizing 60 days, what is left in his account? 60 days is left. Correct? So on and so forth. As and when the time passes, every year 40 days will be credited to his account, and whenever he is utilizing some leave, that many number of days will be deducted from that. Are you understanding? Yes or no? Say for example, he has completed one more year of age. On the job, he has completed 4 years. So more 40 days will be credited to his account. So now, how many days? 100 days are left. One member is added to his family. First kid is arrived. So Ishwar goes on a paternity leave. Paternity leave. Do you understand? Na? Paternity leave. So he is going on a leave for 30 days. So whenever he is taking leave, that many number of days will be deducted. So we are left with 70 days. Thereafter, on completion of one more year, how many more days will be added? 40 days will be added. So whenever you take the leave, it will be deducted from this calculation, and whenever 1 year is completed on the job, 40 days will be added to your leave credit. Why 40 days? That is what is written in your appointment letter. That is what is written in your appointment letter. That is as per the appointment letter. If you work for 1 year, you are entitled to get a leave of 40 days. Oh yes, 26 years. 40 days will be credited to his account. Have you understood this calculation? Yes or no? Okay, now the fourth part here is encashment. Encashment means converting your leave into money. Converting your leave into money. For example, 70 days is lying in his account now. In the Ishwar's leave account, how many days are lying? 70 days. So he is asking his employer to give him cash instead of this leave. So this is called as exchanging leave with money. Exchanging leave with money. This is called as encashment of leave salary. So if you exchange leave with money now, that 70 days will be deducted. That 70 days will be deducted and you are left with 0. Now whatever money you have received, what is the taxability? That is what we need to discuss here. Have you understood? So whatever leave balance you are having in your account, you can exchange that with money. That is called as encashment of leave salary. If you encash, what is the tax treatment? That is what we need to discuss in this topic. So encashment of leave salary, there are two possibilities. Possibility number one, you are encashing the leave during service. Means while you are doing job, you have done the encashment of leave salary. Possibility number two, you are encashing the leave at the time of retirement. You are encashing the leave at the time of retirement. So you have accumulated a lot of leave. Now you are encashing that leave at the time of your retirement. Tax treatment will be as per this flow chart. Tax treatment will be as per this flow chart. Possibility number one, you have encashed the leave while you are in service. So there is an encashment of leave while you are working on a job while you are in service. In that case, whatever amount you receive from your employer on encashment will be totally taxable. Totally taxable in case of all employees. What do you mean by all employees? What do you mean by all employees? Government employee as well as non-government employee. When we say all employee, we mean to say government employee as well as non-government employee. So if you encash that leave while you are in service, then that encashment, whatever money you have received on encashment, is totally taxable. If you are government employee, it is taxable. Even if you are non-government employee, then also it is taxable. Second possibility is you have done the encashment at the time of resignation, death or retirement. Then once again, similar to gratuity, there are two possibilities. Encashment is done by a government employee, encashment is done by a non-government employee. If encashment is done by government employee, it is totally exempt from tax. If encashment is done by non-government employee, then what? In gratuity, we had divided that into two parts, covered by payment of gratuity act, not covered by payment of gratuity act. Here we don't have such two parts. It is only one thing. If it is covered, if the leave encashment is done by non-government employee at the time of resignation, death or retirement, then he can claim the exemption. In which section? Section 10, clause 10 AA, he can claim the exemption. How much exemption? Lower of following four amounts. How much exemption? Lower of following four amounts. Number one, actual amount received. Actual amount received means nothing but whatever money he has received from his employer on the encashment of leave salary, whatever leave he has exchanged with money, that is called as exchange, encashment of leave salary. Whatever money he has received on encashment, that is nothing but actual amount received. Till now you have seen lot of exemptions, exemption of allowance, etc. Everywhere, whenever we used to calculate the exemption, out of 2-3 amounts, one was fixed and that is actual amount received. So throughout the chapter, wherever and whenever you calculate the exemption, we will calculate 2-3 amounts or 4 amounts. Out of those 3-4 amounts, one amount will remain the same and that is actual amount received. So here also first amount is actual amount received. Second amount is maximum limit. How much? 3 lakhs. Maximum limit is 3 lakhs. See, in case of gratuity, this was how much? In case of gratuity, it was how much? 20 lakhs. Here it is 3 lakhs. Third amount, average salary into 10 months. Average salary into 10 months. Let me explain you how to calculate this. Average salary multiplied by 10 months. You have to take average for how many months? You have to take average of 10 months including the month of retirement. You have to take average of 10 months including the month of retirement. Means what? The date on which you have retired, na? From that date, you have to calculate 10 months. Say for example, you retired on 15th August. Then you have to go in a reverse order, ascertain 10 months date to date. So from 15th August to 15th July, from 15th July to 15th June, from 15th June to 15th May, from 15th May to 15th April, so on and so forth. You have to find out how many months? 10 months. See what is the difference between that gratuity. In gratuity also, for those employees who were not caught by payment of gratuity, we were taking average, na? Average of 10 months there also, here also. But there, the methodology of computing average was different. Here it is different. What is the difference? There we were excluding the month of retirement. If we retired on say 15th of August, then we were ignoring the month of August. We used to take 10 months, 10 full months from the preceding month. So we used to take July, June, May, April, March, etc. So the month of retirement was excluded. Here the month of retirement is included. Are you understanding now? Yes or no? Okay. So you have to take average of 10 months. While calculating average, you have to include the month of retirement. So if you retired on 15th August, you don't have to. Sarvanna, in gratuity we used to do what? While calculating average, we used to take average of last 10 months, right? But in gratuity, if you retired, see this is for leave salary. For gratuity, if you retired in August, that August was totally ignored. We used to take 10 months, 10 full months, excluding the month of retirement. So July, May, April, March, February, January, December, November, October, September. We used to take average of these 10 months, na? This month of retirement was excluded. Ha, 1 month I mistake, na? July, June, May, April, March, then February, January, December, November, October, November, December, Jan, Feb, March, April, May, June, July. Okay. So 10 months you have to take. Month of retirement was cancelled, it was excluded. Whereas in case of leave salary, month of retirement is included. Are you understanding? Sarvana? Yes. Okay. So average you have to take 10 months including the month of retirement. What you have to take in salary? For salary, same old definition. Basic salary, DA recognized, turnover commission. Basic salary, DA recognized, turnover commission. So what you have to do? You have to take basic salary of last 10 months, including the month of retirement. You have to take DA recognized of the last 10 months, including the month of retirement. You have to take turnover commission of last 10 months, including the month of retirement. Take the total, divide it by 10, you will get the average salary. And then that average salary should be multiplied by 10. See, for calculating average, we are taking the total and we are dividing it by 10. Once again, that average has to be multiplied by 10 only. Have you understood this third point? Yes or no? Okay. Now let's move on to point number 4. This is the most important point. If you have understood all the 3 points, and if you don't understand point number 4, means this topic needs to be left in option. Point 4 says what? First of all, you take average salary and then you multiply average salary by this bracket. What is this bracket now? Here there are 3 things. Number 1, there is something called as leave entitlement. What do you mean by leave entitlement? Leave entitlement means how much leave you are eligible to take. How much leave you are eligible to take. From where you will get this? From the terms and conditions of employment. From the appointment letter. Whatever is your entitlement, from that, if I deduct leave actually taken, leave actually taken, then the amount which is arrived will be called as leave credit. Will be called as what? Leave credit in the account of employee. This will be called as leave credit in the account of employee. Say for example, you are entitled to take a leave of 40 days. You are entitled to take a leave of 40 days and you have actually taken leave of only 10 days. So what is the leave credit in your account? 30 days. 30 days. See this calculation I showed you now. What is this 40 days? This 40 days is what? Leave entitlement. 80 days is leave entitlement. 120 days is nothing but leave entitlement. What is this 60 days? Leave taken. So what is balance 60 days? Leave credit. Are you understanding this? So we have a very simple formula. What is that? Leave credit in the account of employee equals to leave entitlement minus leave taken. Is that very, very clear? Whether this formula is clear to each one of you? Yes. Now let us try to understand that point number 4. Point number 4 says what now? First of all, you take the average salary and you multiply that average salary by this bracket, whatever you derive from the bracket now. Multiply that by average salary. What is bracket? Bracket is in 2 parts, left part and right part. What is left part? You take leave as per service rule. You take leave as per service rule. In our example, what is service rule? What is written in appointment letter? If you complete 1 year of service, you are entitled to take leave for how many days? 40 days. Or you take leave as per income tax rule. Income tax rule says that we will calculate exemption as per 1 month. If you have worked for 1 year, we will calculate exemption as per 1 month. 1 month means 30 days. And this you have to take for each completed year. Now you are retired now, so you might have worked for a lot of years. So you have to calculate how many years, how many months and how many days you have worked for. Number of years, number of months, number of days. Then you have to round off those round off the years. and then for that many number of years you have to find out what is the leave entitlement as per income tax rules as well as service rule. Then you have to select whichever is lower. From this left hand side, the amount on the right hand side is required to be deducted. What is that? Leave actually taken while in service. So this bracket is nothing but leave entitlement minus leave taken only. This bracket is nothing but left hand side is leave entitlement, right hand side is leave taken. So this bracket is going to give you what? This bracket is going to give you leave credit. This is going to give you leave credit only. Yes or no? Are you understanding? This bracket is going to give you leave credit only. But how this is different as compared to this? There you are taking leave entitlement as per service rule or income tax rule, whichever is lower. You are taking as per service rule or income tax rule, whichever is lower. Are you understanding? Leave entitlement we are taking as per service rule or income tax rule, whichever is lower. So by solving this now, what you will get is leave credit in the account of an employee. This leave credit, if it is a number of days, then you will have to convert that into number of months. And thereafter, multiply that many number of months by average salary. Multiply that many number of months with average salary. If you have taken 20 days leave in April and you have taken 10 days leave in July, then this will be considered as leave actually taken. Will it be considered as 1 month? Yes. Yes. Generally 1 month is considered as 30 days. Generally 1 month is considered as 30 days. See, for the academic purposes, you have to see now how information is given the question. If question is giving you information in number of months, then you do the calculation in number of months. If the question is giving you information in number of days, then you do calculation in number of days, then you convert those number of days into number of months. Are you understanding? Rizwan? In practical life, always number of days will be taken into account. But in academic life, in the question, if examiner gives you all information in number of months only, then you do the calculation in number of months. If he has given you some information in number of months, some information in number of days, then you do the calculation in number of days. Once you have completed the calculation, then you convert that number of days into number of months. Is that very clear? Yes or no? So, average salary will be multiplied by this bracket. This bracket, if you solve this bracket, this will give you what? This will give you leave in the account of an employee. This will give you leave in the account of an employee. As per what? Service rule or income tax rule? Whichever is lower. Whichever is lower. Is that very, very clear? How to take average, that we have understood. Components to be included in salary, that we have understood. How to round off the years? Any part of the year more than 6 months, less than 6 months or equal to 6 months should be totally ignored. You have to do this calculation for completed year. Completed year means part of the year should be totally ignored. Similar to what you used to do in employees not covered by payment of gratuity act. Yesterday I explained you now, for employees not covered by payment of gratuity act, part of the year is required to be ignored. Here we used to ignore the part of the month, correct? Yes or no? Similarly, same is the situation in leave salary. Same is the situation in leave salary. Have you understood clearly? Yes, please respond. Yes. So let's move on to solve this question number 6. Question number 6. Solution format is given to you, na? Question number 6, solution format. Oh, not given. So then let us try. Dikshit, I can give you some time, but classroom time will be wasted, na, if you try. Shall I proceed? Question number 6. Let us read the question. Mr. A was a manager in a factory in Mumbai. He got 14,000 per month as basic salary and 1400 per month as dearness allowance, not accounted for retirement benefits. So this is which DA? This is ordinary DA. Correct? Ordinary DA should not be taken into account for the purpose of computation of exemption with respect to leave salary. He is retired on 1st January 21 and he has received 2,60,000 being the amount of salary for 20 months earned leave to his credit at the time of retirement. Now, before I read further, you tell me what is this 20 months? Is this leave entitlement? What it is? This 20 months is what? This is nothing but leave credit. This leave credit for this many number of months, employer has paid you 2,60,000. So tell me these 20 months would have been calculated by applying which rule? Service rule, correct? Whatever is written in the appointment letter. Based on that, this 20 months would have been the leave credit in the account of an employee. Yes or no? This leave credit is as per service rule. But for the purpose of exemption, for calculating amount number 4, we have to calculate leave credit as per service rule or income tax rule, whichever is lower. Leave accrued at 40 days per year of actual service. This is as per appointment letter. This is as per service rule. As per income tax rule, it is 30 days. He commenced the service of the factory on 1st August 1987. Compute the taxable amount of leave salary, if any, for the assessment year 21-22. So let us start. Leave salary received. Leave salary received is how much? 2,60,000. From that, we will calculate exemption. Exemption under section 10, clause 10AA. It will be lower of following. Number 1, actual amount received. What is the actual amount received? 2 lakh 60. Number 2, maximum limit. How much it is? 3 lakhs. Number 3, average salary multiplied by how many months? 10 months. What do you mean by salary? Salary equals to basic salary plus DA recognized plus turnover commission. Can you tell me what is the amount of basic salary? 14,000. You have to take out average of 10 months now, so I am multiplying it by 10. What is the amount of DA recognized? 0. What is the amount of turnover commission? 0. Divide that by 10. So tell me what is your average salary? Same 14,000. Yes or no? Multiply by 10 months. Will give you how much? 1 lakh 40. Correct? Huh? Point number 4. Average salary multiply by into the bracket lower of leave as per service rule or leave as per service rule or income tax rule for each completed year. From that I should deduct what? Leave actually taken. Now, first of all, we will have to calculate what is completed year now. Completed year of service is not given in the question. Is that given? No, it is not given. So you have to calculate. You have to calculate the period from date of joining till the date of retirement. What is the date of joining the job? 1st August 1987. And the date of retirement is 1st January 2021. So calculate this period in number of years, number of months. From 1st August 1987, Sarvana, it is not 34 years. You calculate in number of years, number of months and number of days. See, if any year is starting in the month of January, it will end in the month of December. If the year is starting in the month of April, it will end in the month of March. Correct? So take this year as starting from August. It will end on which date? It will end on which date? If the year is starting in January, it will end in December. If it starts in August, it will end on which date? Hey, are you understanding what I am trying to calculate? I am trying to calculate the completed year of service. No, no, I'm asking very simple question to you. If a year is starting in the month of January, it will end in the month of December. If it is starting in the month of April, it will end in the month of March. So my question to you is, if it is starting in the month of August, when it will end? Definitely July, 31st July. Now you do one thing, from this 1st January 21, you go in a reverse order and find out which one would have been that 31st July, which would, which year it would have been. The last 31st July, which would be, that would be which year? It would be 31st July 20, correct? So write here 31st July 20. Have you understood what I am doing? Now you pick up your calculator. From calculator 2000, you type 2020, from that you deduct 1987. You are getting how much? 33. Correct? Huh? So this is 33 years. And this you calculate in number of months. After July it is August, September, October, November, December, 5 months. So what is the period of service here? 33 years and 5 months. Have you understood the calculation? Every one of you? Okay. So this 33 years and 5 months should be rounded off to 33 years. Correct? Huh? Now for 33 years, let us try to solve this bracket. Let us try to solve this bracket for 33 years. What is given in your appointment letter? If you work for 1 year, you are entitled to take a leave for 40 days. You have worked for how many years? 33 years. So what is your entitlement as per service rule? Just do the cross multiplication, yaar. 1320 days. 1320 days. This is leave entitlement as per what? As per service rule. We want as per service rule or income tax rule, whichever is lower. So let us also see as per income tax rule. As per income tax, if you work for 1 year, we are going to calculate the exemption as per 30 days. We have worked for 33 years. So how many days? 990 days. This is as per income tax rule. So what is lower out of these two? 1320 and 990 is 990 days. Yes? Have you understood this calculation? You don't focus on writing. I will send you the solution. Don't worry about that. You give me the answer. See, this is the online lecture, na? Classroom lecture is different. I can looking at your faces, I can find out whether you understood or not. Online lectures you have to respond. Have you understood this 990 days? Dikshit, wait for some time here. Dikshit, wait for some time. First of all, tell me, have you understood this? Don't ask me any other question. You just tell me, have you understood this or not? Whatever you have not understood, up to the end of the solution, you will understand everything. But whatever I am discussing as of now, that first of all you should understand. Don't focus on something else. Otherwise, this you will not understand. So what is this? This is my left hand side, correct? Yes. Now can you tell me what is the leave actually taken? What is the leave actually taken in the question? Can you get me the amount of leave actually taken? Sarvana says 20 months. Sarvana, read it carefully what they are saying. He retired on 1st January 21 and received 2,60,000 being the amount of salary for 20 months on leave to his creditor. This is not leave taken, this is leave credit. So whether they have given you leave taken, have they given you leave taken in the question? They have not given, so you have to calculate. They have not given, so you have to calculate. How you will calculate, You will apply that formula. Leave credit equals to leave entitlement as per service rule minus leave actually taken. Now, can you tell me what is leave entitlement as per service rule? You have already calculated, 1320 days. Yes or no? Can you tell me what is leave credit in the account of an employee? It is given the question. 20 months. Convert that 20 months into number of days. Multiply by 30 days per month. How much it is? 600 days. So my leave credit is 600 days. So how do I get the amount of leave taken? 1320 days minus something is 600 days. So what is that minus something? 720 days. Are you understanding this magical calculation? Whenever leave taken is not given the question, you have to ascertain leave taken. While ascertaining leave taken, all the figures you have to take as per the service rule. You have taken leave entitlement as per service rule, leave credit as per service rule, leave taken, everything is as per service rule. So I have got 720 days of what? Leave actually taken. So I am deducting here. Leave taken. How many days? 720 days. So you just tell me, what is the difference between this calculation? What is the difference between this calculation and this one? Both are same. What is the difference? Are they same? No, then what is the difference? This one is as per service rule only. The intention is to ascertain the leave taken amount. This calculation is as per service rule. The objective is to ascertain the leave taken. Whereas this calculation is as per service rule or income tax rule, whichever is lower. Yes or no? Have you understood this? So I am selecting 990 days, This is lower. So this is selected. From this 990 days, I would deduct 720 days. From where you are getting this 390 days at? Sarvanna, from where you got this 390 days? Padmesh, yes, income tax rule is lower. Padmesh, income tax rule is lower. Yes, it is 990 days as per income tax rules. So from this 990 you have to deduct 720. Are you all understanding? This will give you 270 days. Convert this into number of months. Will give you how many months? 9 months. Multiply this by average salary. Average salary is how much? 14,000. Correct? So the fourth amount is how much? 1,26,000. Fourth amount is 126. So out of four amounts, which one is lower? First is 260. Second is 3 lakhs. Third is 140. And the fourth one is 126. So lower is 126. I should take 126 to the outer column. That is the amount of exemption. So what is the taxable amount of leave salary? 260 minus 126. How much? 134. Yes or no? Have you all understood? Yes. Now if at all you are having the doubt, you can ask. Padmesh was asking me why we are calculating this. See, instead of all this calculation, you know that income tax rule is lower, you can directly calculate as per income tax rule also. 1 year, 30 days, 33 years, 990 days, that's all. That is also okay. It is just that detail calculation is done, When you refer at home, you will understand everything. If I do the shortcut methodology right now, what you will understand? Padmesh? Padmesh, are you understanding? Do you have any doubt? Drop me the message. So with this question number 6 is over. Question number 6 we are done. Actually the IT rule is lower. Padmesh, that's what I told you, Padmesh. Here in this calculation, in this calculation, IT rule is lower. You can directly go for IT rule. That is okay. This calculation, IT rule is lower. You can directly go for IT rule. That is okay. This one is okay. You can directly go for IT rules. But this 720 days, 720 days is not given to in the question. 720 days is not given to in the question, leave taken. So you have to find out the leave taken as per service rule only. You have to find out leave taken as per service rule. Understood? Anu madam, what you are asking? Scroll down to start of the sum. This is the start of the sum. What is your doubt? Do you want to copy the solution? That is what you are. Dikshit, Leave taken should always be as per service rule, definitely. That leave taken is nothing but actual leave taken, na? How can that be as per income tax rule? It is always as per service rule. Dixit, when you take leave from your employer, that is definitely as per service rule only, na? Okay. Question number 6 is over. Now we move on to next question, next concept. Yes. Now listen to me very carefully. I am moving on to next concept, and that is pension. What do you mean by pension? Have you heard the pension? Word pension? What is pension? Pension is nothing but the monthly amount received by employee from the employer after retirement. While you are doing job, every month you are going to get salary. But the moment you retire, your salary will stop. What will start? Pension will start. See, gratuity, provident fund, these are lump sum amounts received by you at the time of retirement. But pension is a monthly amount received by you after retirement. Now say for example, first tell me, Manoj has come? Manoj? No, he is having a deep sleep today. Okay, listen to me carefully. Say for example, 30th June 2020, Ishwar is retired. This is date of retirement. So during the month of April 20, May 20, June 20, he might have received his salary. Now he is retired on 30th June. So from July onwards he would receive what? He would receive pension. So his pension is fixed at 2000 rupees. His monthly pension is fixed at 2000 rupees. 2000 per month. So how much he will receive every month? He will receive 2000 per month as monthly pension. Now say for example, July he has received 2000. August he has received 2000. September he has received 2000. October he has received 2000. November also he has received 2000. This is called as monthly pension. Every month he will receive. Now say for example in the month of December 20, Ishwar is in need of money. Ishwar is in need of money. So what he does now? He goes to his employer. And he says that you are paying me 2000 rupees per month na. Out of this 2000 I am ready to sacrifice 1200 per month, meaning thereby from next month onwards you don't give me 2000 rupees. Instead of that, you just give me 800 rupees. I am ready to sacrifice 1200 per month throughout my life. Instead of 2000 per month, now you give me only 800 per month from next month onwards. But For this sacrifice, you give me some lump sum amount. I am in need of money now. So I am ready to sacrifice my monthly amount. You give me lump sum amount. For example, employer says I will give you lump sum amount of 90,000 rupees. Employer is ready to give him lump sum amount of 90,000. This 90,000 is called as lump sum pension. This 2,000 which he was receiving every month was called as which pension? Monthly pension. He has sacrificed his monthly pension, and against that he has received fixed amount, certain sum of money in lump sum. That will be called as lump sum pension. Now you tell me, for the month of December he would receive how much monthly pension? For the month of December, how much monthly pension he would receive? Only 800. January 800. February 800. March 800. Have you understood this? Now the point is, my question to you is, if you retire, after retirement you will get which pension? Will you get monthly pension? Will you get lump sum pension? Or will you get both? After you retire, you will get monthly pension, or you will get lump sum pension, or you will get both? Sarvana, you have to think before answering. After retirement, you will definitely get only one pension, that is monthly pension. And if you want lump sum pension, then what? Then you have to sacrifice your monthly pension. Then only you can get the lump sum pension. You are not going to get both. Only those people who are in need of money, they would sacrifice their monthly pension to get the lump sum pension. Soumya and Sarvana, are you understanding? Once you retire, you will be getting only the monthly pension. Only if you surrender or sacrifice your monthly pension, only in that case you are going to receive lump sum pension. No, I am not talking about this case. Here, I am not talking about this case. I am talking about general. Normally, general situation, what you are going to receive at the time after you retire? Only monthly pension you will receive, Forget about this situation. Once you retire, you will receive only monthly pension. If you want lump sum pension, then what? Then you have to sacrifice your monthly pension, then you will get the lump sum pension. Is that very clear? Yes or no? Are you all understanding? Now let us try to understand what is the taxability of these two types of pension. What is the taxability of these two types of pension? That is what we will understand. So pension is divided in two parts, monthly pension and lump sum pension. Monthly pension in income tax, it is also called as uncommuted pension. It is not uncomputed, it is uncommuted. Lump sum pension is also called as commuted pension. What is the treatment of monthly pension? Monthly pension is totally taxable in case of all employees, that is government employees as well as non-government employees. Monthly pension is taxable in case of all employees, that is government employees as well as non-government employees. So in this example, can you tell me what is the amount of monthly pension? What is the amount of monthly pension? From July to November, 2,000 per month, correct? July to November, 2,000 to 5. How much? 10,000. from December to March. How much? 800 into 4. That is 3,200. So your total monthly pension is 13,200. This 13,200 is taxable in case of which employee? All employees. Government employees as well as non-government employees. Is that very clear? Right hand side we have lump sum pension, also called as commuted pension. If the pension is commuted by government employee, it is totally exempt from tax. Totally exempt. If the pension is commuted by a non-government employee, then it is not fully exempt. It is partially exempt, partially taxable. It is partially exempt, partially taxable. How much is exempt, how much is taxable, that we'll understand. But tell me, give me 1 second. December, January, February, March. Let us try to discuss this. Situation 1. If the employee is a government employee, then what will happen? Monthly pension 13,200 is taxable, correct? What is lump sum pension? What is the amount of lump sum pension? 90,000. Yes or no? What is the treatment of this lump sum pension in case of government employees? Totally exempt. Entire 90 is exempt. So what is taxable is 0. So what is taxable in case of government employee? Total 13,200. Correct? Yes or no? Yes. So I have discussed with you first situation. Situation 1, when the employee is a government employee. Now let me discuss second situation. Situation 2, if employee is non-government employee. If employee is non-government employee. Non-government employee. We are discussing what? We are discussing the treatment of which pension? Lump sum pension. Yes or no? Lump sum pension received by government employees totally exempt from tax. Lump sum pension received by non-government employee. What is the treatment? For that, you should ask a question to an employee. Do you have money? Employee says, yes, I am having money. Employee says, yes, I am having money. If he is having money, then you have to charge more tax. When tax can be more? When the income is more. When income is more? When the exemption is less. Correct? On the other hand, if employee says, no, I don't have money. I am broke, I don't have money. If he doesn't have money, then also will charge tax. But will charge less tax. When your tax will be less? When income is less. When income will be less? When exemption is more. Now, if you ask any Indian person, do you have money? No one is going to say you yes. So you should ask an indirect question. What question you should ask, na? When you got retired, na? Did your employer pay you gratuity? If that person says yes, at the time of retirement I had got gratuity. In other words, meaning is what? He should have money. Because at the time of retirement he had received gratuity, na? So at the time of retirement, gratuity was received. Based on this, we'll decide whether he is having money or not. If at the time of retirement he had received gratuity, means he is having money. So more tax, more income, less exemption. But if at the time of retirement he did not receive any gratuity, gratuity was not received by him, in that case we say that he is not having money. If he doesn't have money, levy less tax. Less tax means only if there is a less income, tax can be less. For that you give more exemption. Have you understood this much? Yes or no? So, left hand side, na? Left hand side situation, we will give less exemption. Right hand side situation, we will give more exemption. Less exemption means what? How much? Less exemption means exemption equals to total commuted value into 1 by 3. And more exemption means what? Your exemption will be total commuted value into 1 by 2. Say any amount into 1 by 3 will be less as compared to any amount into 1 by 2, na? So right hand side we are giving more exemption. Left hand side we are giving less exemption. Now question may come to your mind, what do you mean by this total commuted value? What do you mean by this total commuted value? See, you are getting a monthly pension of 2000. Out of 2000 you have sacrificed 1200. By sacrificing 1200, employer has offered you 90,000. Question is, if you would have sacrificed the entire 2000, na, how much amount you would have received? Do the cross multiplication. Out of 2000, you sacrificed 1200. By sacrificing 1200, you received 90,000. If you would have sacrificed entire 2000, how much amount you would have received? That is nothing but total commuted value. So what amount you are getting? 1,50,000. This 1,50,000 is called as total commuted value. So now you tell me, let us now discuss the calculation in two parts. Part 1, gratuity is received, and part 2, gratuity is not received. What is the commuted pension received in both the cases? Commuted pension received is 90. Yes or no? Commuted pension received is 90. What is the exemption? If gratuity is received, how much will be exempt out of this commuted pension? Total commuted value into how much? 1 by 3. What is the total commuted value? 1,50,000 into 1 by 3. This will give you how much? 50,000. So what is taxable? 40,000. Understood? Huh? Your exemption is how much? Total commuted value into 1 by 2. That is 1,50,000 into 1 by 2. So what will be exempt? 75. What is taxable? 15. Have you all understood this calculation? Yes or no? Okay. This is which pension? This is commuted pension. Commuted pension. This is the taxable amount of commuted pension. This is the taxable amount of commuted pension. He will also have monthly pension, na? How much monthly pension? How much monthly pension? That we already calculated in the previous one, na? 13,200. 13,200. Yes or no? Are you understanding this? That 13,200 will become taxable in all situations. 13,200 is going to become taxable in all situations. So this is second situation. This is third situation. Second situation is what? Employee is a non-government employee. And at the time of retirement, he had received gratuity. Third situation is what? Employee is non-government employee. At the time of retirement, he did not receive gratuity. In that case, taxable commuted pension is 40,000 and here it is 15,000. But monthly pension taxable will remain the same at 13,200 in both the cases. Yes. So what is the total taxable amount in second case? Employee is non-government employee and he had received gratuity at the time of retirement. Taxable amount total will be 53,200. Yes or no? And here it will be 28,200. Yes. Have you understood this very clearly? Great. Look at this question. See here. Commuted pension received by non-government employee. They are divided in two parts. Gratuity received, gratuity not received. If gratuity is received, exemption equals to total commuted value into 1 by 3. Gratuity is not received, exemption equals to total commuted value into 1 by 2. Now let's move on to question number 5. Mr. A retires from X Limited on 30th June 20. He had joined employment on 4th January 93. He gets pension of 2000 per month up to 30th November 20. With effect from 1st December 20. He is requesting for commutation of 60% of his monthly pension. His request is accepted and he receives 90,000 on commutation of pension. Compute the tax amount of pension in each of the following cases. Case A, if he is a government employee. Case B, if he is a non-government employee but he had received 50,000 as gratuity at the time of retirement. Case C, if he is a non-government employee and he had not received any gratuity. Have you understood this? The example which I took now, it was question number 5 only. So, in your textbook now on page number 71, in your textbook on page number 71, a blank format is given to you. There you can do the fill in the blanks at home, not right now. As part of homework, you can do the fill in the blanks and calculate the taxable amount. Correct? Yes, shall I proceed? Shall I move on to next concept? Let's move on to next. Next one is section 10 clause 10b. Section 10 clause 10b. See, yesterday we learned section 10 clause 10 exemption with respect to gratuity. Today we discussed the section 10 clause 10 AA exemption with respect to leave salary. We also discussed the exemption with respect to commuted pension. That is section 10 clause A. Section 10 clause 10A. Now we are moving on to section 10 clause 10B. It is nothing but retrenchment compensation. What do you mean by retrenchment? Retrench means to remove an employee. Retrench means to remove an employee. Retrench means to remove an employee. Why we will remove an employee? Maybe he is not behaving properly. He is not behaving properly. So we feel that if he works in our organization, the environment, he will disturb the environment in the office. So we have removed him. Or maybe we are closing down the undertaking. We are closing down our business. Therefore, we are removing all the employees, saying that we are shutting down the business. Now you take forceful retirement. Or you find out some other job for you. So retrench means to remove an employee. Either if he is not properly behaving, then you remove him. Or if your business is closing down, then you remove the employee. See, generally in case of white collar jobs, say for example, you completed your chartered accountancy and you have joined one of the company. If the CFO of the company comes to you saying that tomorrow onwards we are removing you, will you be worried? You will say that, why the hell you will remove me? I will remove your company from my life. I don't want to work in your organization. It is useless organization. Not paying the salary also on time. You are not worried. Why you are not worried? Because you have got qualification, you have got experience, you have got technical training. So these white collar jobs, now people who are doing white collar jobs, they are not worried. If they lose one job, they will definitely get the second one. But those people who are working in factories, who are workers, they are doing manual jobs. If they lose the job, it is very difficult for them to find another job. That is the reason there is something called as Industrial Dispute Act in India. Industrial Dispute Act 1947. Now Industrial Dispute Act 1947 says, if you want to retrench an employee, if you want to remove an employee, either he is not behaving properly, that is the reason you are removing, or your business is shutting down, you are closing down your business, that is the reason you are removing him. Whatever may be the reason, you can't remove him without giving him compensation. If you want to remove the employee, you have to compensate him financially. That is what is written in Industrial Dispute Act of 1947. But yes, Industrial Dispute Act is not applicable in all situations. It is applicable only in case of industries. So white collar jobs, people who are doing white collar jobs, they are not covered by Industrial Dispute Act. Have you understood? Shall I proceed? So first of all, what is retrenchment compensation? It means a compensation received by a workman at the time of retrenchment, means when he is removed, or at the time of closing down of an undertaking, or at the time of transfer of ownership or management of the undertaking. That compensation will be deemed to be retrenchment compensation. Amount received as retrenchment compensation shall be assessed to tax as salary only. However, some exemption is granted in section 10 clause 10b. So whatever retrenchment compensation that a workman is receiving, that should be considered as his income, but at the same time he is eligible to get some exemption. In which section? Section 10 clause 10b. He is eligible to get certain exemption. In this section? Section 10 clause 10b. How much is the amount of exemption? Exemption is lower of following three amounts. Exemption is lower of following three amounts. Number 1, actual amount received. Number 2, maximum limit 5 lakhs. In case of gratuity, maximum limit was 20 lakhs. In case of leave salary, maximum limit was 3 lakhs. Here it is 5 lakhs. So number 1, actual amount received, as usual. Everywhere one of the amount is actual amount received and the second amount is maximum limit. Here also we have the same. Actual amount received is the first amount. Second amount is maximum limit, which is 5 lakh rupees. Third amount is amount calculated in accordance with section 25F of Industrial Dispute Act 1947. Now how to calculate this amount? It says first you take the average salary. First you take the average salary. Now listen to me very carefully. In this word average salary, first of all you need to understand, you have to take average for how many months. In gratuity, we used to take average of last 10 months excluding the month of retirement. We used to take average of last 10 months excluding the month of retirement. In leave salary, we used to take average of last 10 months including the month of retirement. Here we should take average of how many months? Here they are saying you take the average of 3 months preceding the date on which compensation becomes payable. So you have to take 3 months date to date, similar to leave salary. From the date on which compensation has become payable to you, from that date go backward, take 3 months salary and divide that by 3. You will get the amount of average. So in case of gratuity and leave salary, we used to take the average of 10 months. Here we have to take the average of 3 months. Is that very clear? Next, there is different definition of salary everywhere. For the purpose of computation of deduction with respect to entertainment allowance, salary had only one component, that is basic salary. Do you recollect? Section 16 clause 2, deduction for entertainment allowance, which is allowed only in case of government employees. Deduction will be lower of following 3 amounts. Number 1, basic salary into 1 upon 5. Number 2, maximum deduction 5,000. And number 3, actual entertainment allowance received. So for the purpose of entertainment allowance, salary included only basic salary. For the purpose of house rent allowance, for the purpose of employer's contribution to recognized provident fund for the purpose of employees not covered by payment of gratuity act, for the purpose of leave salary. All these places, definition of salary was same. It included three components: basic salary, DA recognized, turnover commission. It included three components: basic salary, DA recognized, turnover commission. Whereas in case of those who are covered by payment of gratuity act, there the definition of salary was different. There also we had basic salary, DA recognized, we also had DA ordinary. In other words, we had entire DA. So at all these places now, what is required to be taken into the definition was given to you. What is required to be taken into the definition was given to you. What are the inclusions of salary was given to you. Here now, in this salary, what things are required to be included is not given. What things are required to be included is not given. Then what is given? Those things which are required to be excluded is given. Those things which are required to be excluded is given. So how many things are required to be excluded? Number one, bonus should be excluded. Number two, employer's contribution to provident fund, pension fund should be excluded. Number three, gratuity should be excluded. So you can remember three alphabets B, E, G. This bag is required to be excluded. So will you consider basic salary? Yes. Will you consider DA recognized? Yes. Will you consider turnover commission? Yes. Will you consider fixed commission? Yes. Will you consider traveling allowance, helper allowance, academic allowance, research allowance, conveyance allowance? You will consider everything. You will consider everything. Superannuation fund, employer's contribution to superannuation fund. That is not mentioned. That is not mentioned means that should be considered. That should be considered. These people will not get superannuation. Madam, oh sir, Sarvanna, these people are not going to get superannuation here. Superannuation fund is maintained for those employees who are working at a higher designation. These people are working at a lower designation. So they will not have superannuation. Practically not possible. Have you understood this? Every time they used to tell us what is required to be included in salary. This time they have given us what is required to be excluded in salary. So this is the way in which average salary is required to be calculated. Then that average salary should be multiplied by 15 upon 26. And then it should be multiplied by period of service. DA ordinary should be taken. DA ordinary, DA recognized, traveling allowance, conveyance allowance, academic allowance, research allowance, everything should be taken. Whatever is taxable, everything should be taken. Whatever is taxable. Fully allowance you have na, telephone allowance, lunch, tiffin, refreshment allowance, city compensatory allowance, dearness allowance. Should we take all those things? Yes, everything should be taken. Is that very clear? Dixit? Yes or no? Let's move on to last part. Period of service. How do we calculate period of service? Any part of the year more than 6 months shall be taken as 1 year. What do you mean by that? 15 years, 9 months, 9 days will be considered as 16. 15 years, 5 months, 5 days will be considered as 1, 5, 15. 15 years, 6 months, 0 days will be considered as 1, 5, 15. 15 years, 6 months, 1 day will be considered as 16. So similar to those who were covered by payment of gratuity act. This one is similar to those who are covered by payment of gratuity. Is that very clear? Let's move on to the small question. Let's move on to the small question very quickly. Mr. Garg received a retrenchment compensation of 10 lakhs after 30 years and 4 months of service. Tell me these 30 years and 4 months will be taken as what? It will be taken as 30 years. It will be taken as 30 years. At the time of retrenchment, he was drawing a salary of 20,000 per month and dearness allowance of 5,000 per month. Compute his taxable retrenchment compensation. Compute his taxable retrenchment compensation. So let us calculate. Question number 7. Retrenchment compensation received. How much amount is received? 10 lakhs. Less exempt under section 10 clause 10b lower of following. Number 1, actual amount received. This is what? 10 lakhs. Number 2, maximum limit 5 lakhs. Number 3, what is number 3? Average salary into what? 15 upon 26 into period of service. You have to take average for how many months? Average of last 3 months. And in salary you have to take what components? Everything except BEG, bonus. It is not given to us in the question. Employer's contribution to provident fund, pension fund, that is also not given. Gratuity payable on retirement, that is also not given. So what will be taking up? Basic salary and as well as DA. So what is basic salary? 20,000 into 3. DA recognized 5,000 to 3. This will be divided by 3 months because we have to ascertain average. So what will be average? 25,000 into 15 upon 26 into 30 years. 432, 692. That will give you 432, 692. So what is lower? Rizwan, date of retrenchment including the date of retrenchment, including the month of retrenchment. $432, 692 will be exempt. So what is taxable? Taxable retrenchment compensation 567,308. Yes, is that very clear? So we have completed with section. Section 10 clause 10B, retrenchment compensation. Do you have a break right now or after completing one more point? Yes? After completing one more point, if we complete one concept now, VRS compensation, then all these retirement benefits will be over. Then we can start with perquisites after the break. What do you want me to do? My speed is okay now? Am I moving very, very fast? Kritika is asking me in this question, DA is recognized or ordinary? That is not given the question. Kritika, it is not given the question whether the DA is recognized or ordinary. If it is not given, you can take the assumption. You can take the assumption. Either you can take the assumption that DA is recognized, or you should take the assumption that DA is ordinary. But generally we would take the assumption that DA is ordinary if question is silent. But here you have to take both DA, na? Because here what is required to be excluded is given to you. Correct? Okay. Now let's move on to the last point. Once we complete this now, after the break we will start with the new concept, that is perquisite. In fact, this is the CA intermediate part. Till now whatever I am teaching you now, that would also form part of your BCom exams. Chennai, I have not seen what is the syllabus for BCom for taxation, but Mumbai, in BCom we have till section 10 clause 10 double C. In the BCom exam, perquisite is included. Yes. To what extent it is included, that is also important. Okay. Let's move on to this compensation on voluntary retirement. Compensation on voluntary retirement. See, voluntary retirement does not mean that you will go to the employer and say that I want to retire, please pay me compensation. Voluntary retirement does not mean that you will go to the employer and say to him that I want to retire, please give me compensation. That is not the meaning of voluntary retirement. Voluntary retirement means generally whenever any organization is having surplus employees, see, most of the government companies are having surplus employees. Most of the government companies are having surplus employees. So if any organization is having surplus employees, then they would try to offer some compensation to the employees and they will ask them to retire. They will offer some decent amount of compensation to employees and they will ask them to retire voluntarily. So voluntary retirement means in any organization, if there are more number of employees as compared to what the organization requires. For example, organization is having 80 employees. But now they only need 50. So what they will do now? They will make a voluntary retirement scheme. They will make a voluntary retirement scheme. Then they will schedule a meeting of all the employees, and to all the employees they would explain that if you accept voluntary retirement, how much amount of compensation you are going to receive. So that compensation amount will be tempting enough to accept the voluntary retirement. People will feel that why I should work for so long span of time. For example, your age is say 52 years. Now your organization is offering you voluntary retirement and they are paying you decent amount. Then the employee will feel that why I should work for more 8 years. Without working only I am getting this much amount of money. So let me accept the voluntary retirement and let me retire. So whenever in the organization there are surplus employees, organization would offer a voluntary retirement and organization will give the compensation to the employee to accept the voluntary retirement. If employee accepts the voluntary retirement, he will get the compensation. Whatever compensation he is receiving now, it will be considered as his income. From that, he is eligible to claim exemption under section 10 clause 10c. He is eligible to claim exemption in section 10 clause 10c. Exemption is lower of following three amounts. Exemption is lower of following three amounts. Number one, actual amount received as usual. Always we have first amount as actual amount received. Number two, maximum limit of exemption is 5 lakhs. Similar to retrenchment compensation, maximum limit is 5 lakhs. Number three is higher of A and B. See, in point number 3, you have to calculate point A, then you have to calculate point B. Out of these two, you have to select whichever is higher. You have to select whichever is higher. Now from point number 1, 2 and 3, you have to select whichever is lower. What is this point number 3? How do we calculate this point number 3? I will explain you. Say for example, employee had joined the employment at the age of 30 years. Employee had joined employment at the age of 30 years. Right now his age is 55 years. Age as of now is say 55 years. Age as of now is 55 years. Now tell me, what is his past and what is the future? How many years he has worked in the past? From the age of 30 years up to the age of 55 years. So he has worked for 25 years. He has worked for 25 years. What is the future? If he doesn't accept the retirement and if he goes on working, he'll have to work till the age of 60 years. Then he can work for 5 more years. This future period, you have to take it into number of months. You have to take this into number of months. And for past period, for every year, you have to take 3 months. For every year, you have to take 3 months. Meaning thereby, you have worked for 1 year, your exemption will be calculated at the rate of 3 months salary for every completed year of service. So if you have worked for 25 years, for every year, exemption will be calculated taking into account 3 months salary. So for 25 years, it is salary for how many months? 75 months. And you convert this right hand side 5 years into number of months, you will get 60 months. Now from this 60 months and 75 months, you select whichever is higher, that is 75 months. Have you understood this calculation? Now this 75 months should be multiplied by last drawn salary. It should be multiplied by last drawn salary. So look at this point number 3. It says in point A, you take last drawn salary. What do you mean by last drawn salary? Salary for the latest month. And what do you mean by salary? Same old definition. Basic salary, DA recognized, turnover commission. Basic salary, DA recognized, turnover commission. You take the basic salary, DA recognized, turnover commission for the latest month. That is nothing but your last drawn salary. Multiply that by 3 months and multiply that by completed year of service. Completed year of service is nothing but past. Thereafter in point B, you take last drawn salary multiplied by remaining months of service. Remaining months of service. In our example, remaining months of service was 60 months, 5 years. Have you understood this? Yes. So you calculate past in point A, calculate future in point B, then you select whichever is higher out of point number A and B. Whichever is higher will become point number 3. Then Rizwan, first of all tell me, have you understood this? Have you understood this? Past, future, have you understood this? The example which I took? Yes, okay. So here we are saying that whatever VRS compensation you have received, that is considered as your income. Out of that, you are eligible to get some exemption. How much exemption? Lower of following 3 amounts. What is first amount? Actual amount of compensation which you have received. What is second amount? 5 lakhs. What is third amount? It is higher of point A and point B. What is point A? Point A is your past. In that example we took past, you had joined employment at the age of 30 years. You are taking VRS at the age of 55 years. So what is past? 25 years. So you take last drawn salary. For each year you multiply it by 3 months and you multiply that by 25 years. You will get the details of past. Then you move on to point B. Take last drawn salary, multiply it by remaining months of service. In our example, you took VRS at the age of 55 years. If you would have worked, you can work up to the age of 60 years. So remaining period of service is 5 years. Convert that into number of months, that is 60 months. So then you select A or B, whichever is higher. That will become your point number 3. Then out of point number 1, 2 and 3, you select whichever is lower. Is that clear, Rizwan? Rizwan, have you understood? Yes. Now, further it says, you are eligible to get exemption only if you receive compensation from these 11 people, 11 organizations. See, definitely you will receive VRS from these people only. See, if you work in a chartered accountant office, he is not going to offer you VRS throughout your life. If you are working with bigger organization, then only there is option of VRS. Okay. Now listen to me carefully. If you want to calculate this point number 3, Don't you feel that you will need the information? When the employee had joined the employment, when he is taking the VRS, what is his age, all this information is required na, to calculate point number 3. What if that information is not given in the question? What you will do if that information is not given in the question? Then you don't calculate point number 3. Then you just move on to point number 1 and 2, select lower out of 1 and 2. Is that very clear? This is written here clearly. If the question does not provide particulars for calculating limit indicated in point 3 above, then lower of point 1 and 2 can be taken. Yes? Now I will discuss these 3 paragraphs, small ones. Exemption only once. This VRS exemption under section 10 clause 10C, you can claim only once in your lifetime. You can claim exemption only once in your lifetime. You cannot claim more than once. Now question may come to your mind saying that, can I claim exemption of gratuity twice? Can I claim exemption of leave salary twice or thrice? Exemption of VRS can be claimed only once. Exemption of gratuity can be claimed twice, thrice, etc. Similarly, exemption of leave salary can also be claimed more than once. But very important point to be noted is, you can claim exemption of gratuity twice or thrice. We don't have any issue in that. But during your lifetime, we are not going to give you exemption of more than 20 lakhs. During your lifetime, we are not going to give you exemption of more than 20 lakhs. For example, you worked with, say, Reliance Industries. You worked with Reliance Industries, from there you resigned and you got a gratuity of, say, 7 lakhs. So, in income tax, the word retirement includes retirement by superannuation, retirement by death, retirement by resignation also. So, you were working with Reliance Industries, there you have resigned and you have received a gratuity of, say, 7 lakh rupees. So what you will do? You will calculate exemption as per section 10, clause 10. Now say for example, the amount of 7 lakh which is the actual gratuity received, that itself is the lower amount. So can I say your exemption will be 7 lakhs? Actual amount received is 7 lakh, that itself is lower amount out of 3, so your exemption will be 7 lakhs only. So in that case nothing is taxable. Now you have resigned from Reliance, now you have joined the Tata Group. There also you worked for 10-12 years. Now from there also you are resigning. From there also you have received gratuity. Once again you will calculate the exemption of gratuity. But this time when you calculate the exemption of gratuity, that maximum limit will not be 20 lakhs. That will be 20 lakhs minus whatever exemption you have claimed in past, that is 7 lakhs. So 20 lakhs minus 7 lakhs, balance is 13 lakhs. In other words, gratuity and leave salary, you can claim exemption more than once. But those limits of 20 lakhs and 3 lakhs, those are the limits which are applicable for your lifetime. Means throughout your life you cannot claim an exemption of more than 20 lakhs in gratuity. Whether it is on one occasion or multiple occasions, that doesn't make a difference. Similarly, in case of leave salary, you cannot claim exemption of more than 3 lakhs. Whether it is on single occasion or multiple occasion, that doesn't make a difference. But here here the story is different. VRS you can claim exemption only once. You can claim exemption only once in your lifetime. Multiple occasion exemption is not allowed only. Have you understood the difference? Yes or no? Next point says either you claim exemption or you claim relief. You can't get both. Either you claim exemption or you claim relief. What is this relief is not known to you. That we will discuss at the end of the chapter. Actually, CA Institute has removed from your syllabus. But we will do some calculation of relief at the end of the chapter. That point of time you will realize what is relief. But here we are saying you either you can claim exemption or you can claim relief. You can't get both. And lastly, there is VRS scheme guidelines. These are given in Rule 2BA of the Income Tax Act. Sorry, Income Tax Rules. VRS scheme should be framed in accordance with these guidelines. Then only exemption will be available. What is first point? The VRS scheme should apply to all employees who have either completed 10 years of service with your organization or who have completed at least 40 years of age. In other words, you should not offer any VRS to youngsters. You should not offer VRS to youngsters. If you offer VRS to youngsters, what is the point? Someone is asking me if I have received gratuity from two employers, limit will remain the same or limit will double? Limit will remain the same. 20 lakhs in lifetime, leave salary 3 lakhs in lifetime, whether received from single employer, multiple employer, single occasion, multiple occasion, doesn't make any difference. See, these guidelines you need not remember, only for our understanding I have kept in the notes. This is not there in ICI module. I have kept only for our understanding. So, employee should have completed at least 10 years of service or he should have completed at least 40 years of age. This VRS should be offered to all employees including workers and executives. One second, Dixit. This VRS should be offered to all employees including workers and executives except directors. But directors, why you should offer VRS? There will not be surplus directors in the company. So you should not offer any VRS to directors. Number 3, the people to whom you have offered VRS, they will leave your organization. Now you should not offer them employment in some other organization of the same management. For example, you took VRS from Tata Steel and Tata Steel compensated you. They gave you VRS compensation. Now they should not offer you employment in some other company, say Tata Chemicals. So, if you are offering VRS to an employee, he has accepted VRS, then he has to actually retire. You can't offer him alternate employment in some other company of the same management. Otherwise, the purpose of VRS will get defeated. Are you understanding? What is the purpose of VRS? To reduce the existing strength of employee. That is the purpose of VRS. So, whatever people have left company by taking VRS, so now there is a vacancy created in that place. You should not fill up that vacancy. Otherwise, the purpose of VRS will get defeated. So, the main objective or main purpose of the VRS is to reduce the strength of employees. So, you should not fill up the vacancies created by VRS. You should not offer the alternate employment to those people who have accepted the VRS. They should not be offered any alternate employment in any other company of the same management. These are the guidelines of VRS scheme. VRS scheme should be made in accordance with these guidelines. Then only employee will enjoy the exemption. Otherwise not. So with this section 10 clause 10C is over. We can have a break. But I am just going through the doubts. Dixit is asking me no need of continuous period. Which you are asking this question in connection with what? Dixit? You are asking this question in connection with which topic? Ronak is asking, as you said, for rent, HRA, 40% for non-metro and 50% for metro. But what if the person is placed to a foreign place, like how much exemption will be given? Dixit says rule 2BA.1. Dixit, that period will be continuous only, na? By default, it is continuous. VRS scheme should be offered to those employees who have completed 10 years of service with your organization. Now, whether it is continuous or discontinuous, not mentioned, but you should have completed 10 years of service. If your total service period is less than 10 years now, then company should not offer you VRS. That is what they are trying to tell. See, new employees, the employees who have recently joined, they should not be offered any VRS. The employees who are young enough, they should not be offered any VRS. That is the purpose of putting such condition. Now Ronak is asking me, sir, what if the person is located outside India? House rent allowance exemption will be calculated taking into account 50% of salary or 40% of salary. Ronak, if an employee is posted outside India for a temporary period of time, then he might be residing in India actually. He might have gone to foreign place, foreign location for a temporary span of time. Then company will provide him accommodation there. And here, if he stays in a rented premises, he can claim HRA exemption. See, generally what will happen, Generally what will happen, if you are being posted to some foreign country, you are not going to buy a flat there. Company will provide you accommodation. Generally, company provides accommodation. And if company provides you accommodation to stay, then they will not pay you HRA only. If company provides you accommodation to stay, they will not pay you HRA, so the question of exemption will not arise. Okay, if a person is resident in India and perquisite is not given only for 3 months, in that case you should calculate at what rate? You can calculate at 50%. You can calculate at 50%. Law is silent on that, so you can take the interpretation the way it is beneficial to you. So you should calculate at 50%. Sarvanna, 10 be average salary. Oh, your break is started, Till what time? Your break is already started. I am just solving the doubt of those who are asking me. Not 9:50, at 9:55. Once again. Sarvanna says what? Section 10, clause 10b, average salary calculation, number of months not considered retirement month. Section 10, clause 10b. Here we are considering the month of retirement. See what language they have used. 3 months immediately preceding the date on which compensation has become payable. 3 months from date, So including the month of retirement. Sarvanna, have you understood? Okay. Rizwan says what? Please explain exemption only one in voluntary retirement. Rizwan, here we are saying that entry into this section 10 clause 10c is allowed only once. Means throughout your life, you can claim the exemption in section 10 clause 10c once in your lifetime. Rizwan. Generally, person should marry how many times in lifetime? Generally, a person should marry how many times in a lifetime? Once in lifetime, na? Similarly, here also, they are saying that we will allow you to get into this section only once in lifetime. Now, when you are using this section, your exemption can be 3 lakh also, 4 lakh also, it can be anything, whatever it is. But you will be allowed to get into this section only once in lifetime. So if you have accepted VRS from one organization and you have already claimed exemption in section 10 clause 10C, then you join some other organization, once again you take the VRS, then on next occasion you are not going to get any exemption. Is that very clear? Other retirement benefit you can accept. Other retirement benefit, the limits are with respect to amounts, not with respect to number of occasion. Gratuity limit is 20 lakhs. That is 20 lakhs is throughout your life. How many occasion? There is no restriction on that. Leave salary also similar. So 20 lakhs, 3 lakhs during your lifetime. It can be one occasion, it can be two occasions, it can be three occasions. Have you understood? Rizwan? Okay. Sarvana says what? Only gratuity we will not consider the retirement month. Correct. Correct. Only gratuity we will not consider the month of retirement. Leave salary we will consider the month of retirement. And here also retrenchment we will consider the month of retirement. Okay. I'll send you the solution. But few important points I am telling you. Few important points I am telling you from the question. This is net basic salary. This is net basic salary. So you have to ascertain the gross basic salary. Let me discuss once. You pick up the calculator very quickly. We keep a target of 3-4 minutes. Right now it is 10:04. Before 10:08, 10:09 we should complete this. Let us start. Pick up the calculator, pen, notebook, etc. Net basic salary. This is after deduction of profession tax, income tax. So we need to add back profession tax, income tax, correct? Up to August, April, May, June, July, August. How many months? 5 months. So 18,300 into 5. 18,300 into 5. From September to March, it is how many months? 7 months. Profession tax deducted 200 per month. Multiply by 12 months. Income tax deducted 1,500 per month. Multiply by 12 months. Now you give me the amount of gross basic salary. Add up all these 4. Give me the amount of gross basic salary. $275 it should be. It should be 2,75,000. Are you getting the gross basic salary 275? Yes. Okay. Transport allowance. This is fully taxable because employee not given whether employee is handicapped or not. So we should presume that he is not. So this transport allowance is fully taxable. Into 12. 24,000 is fully taxable. Dearness allowance 5,000 into 12. 60,000 is fully taxable. Employer's contribution to provident fund 4,000 to 12 is 48,000. From that, how much is exempt? 12% of salary. What do you mean by salary? Basic salary, DA recognized, turnover commission. Turnover commission is not given to us in the question. What is basic salary? 2,75,000. What is DA recognized? 5,000 is DA, of that 60%, that is 3,000. 3,000 per month multiplied by 12 months, 36,000. So 275 plus 36 is how much? 275 plus 36. 311. Of that you take 12 percentage. 37,320. So deduct this 37,320 from 48,000. What is taxable? 10,680 is taxable. Next, children education allowance. They are using the word 500 per month per child for 2 children. So how much amount is received? 500 per month multiplied by 12 months multiplied by 2 children. So how much amount will be received? 6,000 into 2, 12,000 will be received, correct? How much is exempt? 2,400. So what is taxable? 9,600 is taxable. Next is city compensatory allowance. City compensatory allowance is fully taxable. 3,600. Hostel expense allowance. They have not used the word per child here. In the children education allowance, they had used the word per child. Here they have not used. So this 380 is received for how many children? 380 is received for 2 children. Yes or no? So for 1 child, how much amount is received? 190. For 1 child, 190 is received. So what is the total amount received? 4,560. What is exempt? Amount received per month per child 190. Amount specified per month per child 300. What is lower? 190. So exemption is 190 into 2 into 12. That is 4,560 only. So what is taxable is 0. Yes, is that clear? Next, tiffin allowance. That is fully taxable. That is fully taxable. Don't deduct this 3,700. Helper allowance. 1,000 rupees per month is received. This belongs to partly taxable, partly exempt category. Category 1, category A. Given for official purpose. Out of 1,000, 700 is spent. So what is taxable? 300 is taxable. Into 12. 3,600. Correct? Next, fixed medical allowance. This is fully taxable. Bonus is taxable on receipt basis. Don't multiply it by 12. So compute the amount. Add up and get me the amount. What is the amount of gross salary? $275 is basic salary. Transport allowance 24,000, DNS allowance 60,000, employees contribution to provident fund 10,680, children education 9,600, city compensatory 3,600, hostel expenses totally exempt, tiffin allowance 5,000, helper allowance 3,600. Fixed medical allowance 12,000, bonus received 50,000. Total is 453, 480. From that you get standard deduction 50,000, no deduction for entertainment allowance, profession tax 2,400. That is given the question of profession tax 200 into 12. So 52,400 is the amount of deduction under section 16. So total deduction 52,400 and income from salary is 4,01,080. Is that clear? Let's move on to the most important topic of this chapter. The most important topic of this chapter is perquisites. Perquisites. What do you mean by perquisites? See, first of all, we will understand what is perquisite. Then we will understand what is the difference between allowance and perquisite. Or let us first understand. See, perquisite means any facility given by employer to employee. Any benefit, any amenity, or any facility. Any benefit, any amenity, any facility given by employer to employee. This benefit can be monetary also, it can be non-monetary also. Perquisite does not mean it is non-monetary. There are monetary perquisites also. So what is the difference between allowance and perquisite? Allowance is fixed in nature. Whether you spend 10,000, whether you spend 1,000, we are going to give you 2,000 every month. So irrespective of whether you are spending less or spending more, we are going to give you a fixed amount of money, that is called as allowance. It does not depend on actual expenditure. Your actual expenditure can be more than that, it can be less than that, we are not concerned with that. We are going to give you a fixed amount of money along with basic salary, that will be called as allowance. Perquisite generally depends upon actual expenditure. Whatever amount you have spent, based on that perquisite will be given. Allowance can be divided into two categories, given for official purpose, given for personal purpose. Perquisite can be divided into two categories, monetary perquisite, non-monetary perquisite. See, here we need to understand the distinction between three things. Number one, what is an allowance? Number two, what is monetary perquisite? What is monetary perquisite? And number three, what is non-monetary perquisite? So we need to understand distinction between three things. Let me give you one example. Say for example, your employer is giving you medical allowance. At the rate of 500 rupees per month. So this is fixed amount of money given to you along with your basic salary. Whether you are spending that much or not, employer is not concerned about that. You may spend for the more than 500, less than 500, or you may not spend at all. He is going to give you fixed amount of money every month. That is called as allowance. Now what is the difference between monetary perquisite and non-monetary perquisite? Monetary perquisite means employer has given you benefit and you know what is the quantum of benefit. How much money employer has spent for you, that is known to you. For example, you have fallen sick or your family member has fallen ill You are hospitalized and treatment is given. Near to your residence only, you are admitted to the hospital. The bill of the hospital is say 2 lakh rupees. And this entire bill of 2 lakh is paid by your employer directly to the hospital. Do you know what is the amount of benefit you have received? Yes, he has paid the bill of 2 lakhs. So your benefit is 2 lakhs. So bill is directly paid by employer. Bill is directly paid by employer to the hospital. Or another possibility is bill is paid by you. Later on it is reimbursed by employer. Later on it is reimbursed. Then also it is a monetary perquisite. So possibility number 1, you got admitted in the hospital, you got treated, the bill amount is 2 lakhs. You went to the employer has directly made a check of 2 lakh in the name of hospital. So bill is paid by employer directly to the hospital. Or second possibility, you paid 2 lakhs out of your own pocket. Thereafter you submitted the bill in the office and your employer has reimbursed the entire amount of 2 lakhs. In both these cases, this will be called as monetary benefit or monetary perquisite, because what is the quantum of benefit is known to you. What is the quantum of benefit is known to you. There is no need to ascertain, there is no need to find out. It is readily available. It is readily known to you. In that case, we say it is a monetary benefit or monetary perquisite. Last possibility, say for example, your employer is having his own hospital. For example, you are working with, in Chennai you have Apollo hospital. For example, you are working with Apollo hospital as an employee. You are working with Apollo hospital. Either you or any of your family member has fallen ill and you have got admitted to the Apollo hospital only. And employer has not charged you any money for that. He has not charged you anything. So don't you feel you have received the benefit? Yes. Do you know what is the benefit received by you? You do not know, you will have to ascertain. You do not know the benefit, you will have to ascertain. See, everything in this world can be measured in monetary terms. But question is whether there is a need to measure or the benefit amount is already available. If the benefit amount is already available, then we say it is monetary perquisite. If there is a need to measure, there is a need to quantify, then we say it is non-monetary benefit. Have you understood this? Yes or no? Do you want me to give you one more example? Have you understood? If you have understood, I will proceed. If you have not understood, if you want me to give one more example, tell me. Listen. Your employer is giving you children education allowance for the education of your child. Need to quantify means you will have to ascertain the value. For example, you came here to attend a live class lecture. I was having my breakfast and you forgot to carry the tiffin. So I offered you a breakfast. So you have got some benefit, na? Now how much benefit do you know? You do not know, but you can quantify, na? You had 6 idlis, so you can quantify, na, what is the value of 6 idlis. So there is a need to quantify, na? In that case, it is called as non-monetary perquisite. But for example, you have joined inside commerce studies Day 1, Tarun sir said that if you are having morning lecture, if you are having lecture for 6 hours, 7 to 1 or 7 to 2, then your breakfast will be funded by us. Wherever you want to have breakfast, you can have it. Just come here, submit the bill, and we'll pay the amount. Do you know what is the benefit received by you in that case? Yes, it is written in that bill. There is no need to quantify. In that case, we said is monetary perquisite. Yes or no? Okay. For example, I am giving you one more example. Your employer has given you children education allowance. Children education allowance. See, in this case, na monetary benefit, if you talk about medical, na, the hospital is selected by employee. Hospital is selected by employee. Means the employee decides that I want to get admitted to this hospital. And here na, benefit, there is a need to quantify the benefit. Here, either the hospital will be owned by your employer or it will be a tie-up hospital. Tie-up hospital means your employer has done tie-up with that hospital saying that if any of my employee come to you, you should provide free treatment, I will pay the bill. So it is a tie-up hospital. Now have you understood more clearly? Still let us take one more example here. For example, your employer is giving you children education allowance at the rate of 500 per month per child. For your children's education, you might be spending more than 500, you might be spending less than 500, or you might not be spending anything. Your employer is not concerned with that. He is just telling you, I am going to give you 500 per month, that's all. That is an allowance. Fixed amount of money given by employer to employee along with salary. Second possibility is, in this case, you are selecting the school. You are selecting the school. In that school, you are taking the admission for your child. And your child is admitted to that particular school. You are giving the name of the school to your employer. Employer is making the check directly in the name of school. So, fees of your child is directly paid by employer to the school. Or another possibility is, you are paying the fees out of your own pocket. Thereafter, you are submitting the fee receipt to your employer and your employer is reimbursing the fees. Your employer is reimbursing the fees. So, here we say that fees is either paid by employer or reimbursed by employer. Fees is either paid by employer or reimbursed by employer. Here generally school is selected by employee. School is selected by employee. Last possibility, here there is a need to quantify the benefit. Here, possibility number 1, school is owned by employer. So employer is having his own school. In that school, your children are studying. Or employer is not having his own school. He has done tie-up with the school. He has done the tie-up with some school. Your children have taken admission in that school. You are not expected to pay any fees. Your employer will directly make the payment. So here definitely you have received the benefit. How much benefit is received? You do not know. You will have to quantify. Yes, it is certain that benefit is received. But what is the quantum of benefit that is required to be ascertained? Then it is non-monetary perquisite. Have you understood this now? I can give 10 different examples. But the thought process, the criteria would remain the same. Yes? Shall I proceed? In simple language, if I want to conclude in simple language, in the allowance, in the allowance, employer will, examiner will use the word allowance. If it is an allowance, examiner will specifically use the word allowance. In case of monetary perquisite, they will use the word paid or reimbursed. School fees of employees' children paid by employer. School fees of employees' children reimbursed by employer. Then it is monetary. And in case of non-monetary perquisite, examiner will say that employees' children are studying in employer's school. Then it is non-monetary. Is that very, very clear? Yes. So we have understood the difference between allowance and perquisite. We have understood the difference between allowance, perquisite and non-monetary perquisite. Same examples are given here, you can refer. Now let's get into this perquisite now. See, in the chapter of salary, the most important part is perquisites, and the section is section 17 subsection 2. In that section 17 subsection 2, we are having 8 clauses, and in clause number 8, we are having 9 points. Plus in section 17 subsection 2, clause 3 versus clause 4 also we are having 6 points. So in all there are around 20 points. So let's quickly get into this. Perquisite means what? Perquisite means any benefit, any amenity or any facility, any benefit, amenity or facility given by employer either to employee or to employees member of household, or to employees member of household. So benefit is given to whom? Benefit is either given to employee or it is given to employees member of household. Now who all are included in the definition of member of household? Number 1, member of household includes spouse of employee, children of employee, children's spouse. Children's spouse, do you understand, na? If you are having a son, son's spouse means your daughter-in-law. If you are having a daughter, her spouse means your son-in-law. So point number 1, spouse. Point number 2, children and their spouses. Point number 3, parents. And point number 4, servants and dependents. Who all will be included in this word dependent? Any person who is financially dependent on someone. In this case, any person who is financially dependent on this employee. So this word dependent is very much wider in scope. It may include your dependent brother, dependent sister, dependent grandparents, paternal grandparents, maternal grandparents, dependent father-in-law, dependent mother-in-law. It can include anyone who is financially dependent on you. So, perquisite is nothing but any benefit, any amenity or any facility given by employer either to employee or to his member of household. Member of household includes number 1 spouse, number 2 children and their spouses, number 3 parents and number 4 servants and dependents. Number 4 servants and dependents. Now here we say that perquisite can become taxable to you only if there is a personal advantage. Perquisite can become taxable to you only if there is a personal advantage. If there is no personal advantage, perquisite cannot be taxed. Perquisite can be taxed only if there is a personal advantage to employee. If there is no personal advantage, perquisite cannot be taxed. For example, you are working with some company and you are going on an official tour to Delhi. You are working with a company and you are going on an official tour to Delhi. In Delhi, your company has booked a hotel for you. You can stay there, you can have food there. Is it a perquisite? Yes, it is a perquisite. It is a facility, it is a benefit given to you. But do you have any personal advantage over it? Are you on a personal visit? Or you are on an official visit? If you are on an official visit, then we said that there is no personal advantage to you. Nothing can be taxed. If you are on a personal visit along with your family and company has arranged a hotel for you, then yes, there is a personal advantage, tax will be levied. Are you understanding? If there is a personal advantage, tax can be levied. If there is no personal advantage, nothing is taxable. Have you understood this very clearly? Yes or no? Okay. So perquisite can become taxable only if there is a personal advantage to employee. If there is no personal advantage, it cannot be taxed. Now, you move on to beginning of the chapter. You move on to beginning of the chapter. Page number 36. Page number 36. See, we are having list of perquisites. Section 17, subsection 2, clause wise we are having list of perquisites. Every time you have to identify whether this perquisite is monetary perquisite or non-monetary perquisite. I have clearly mentioned here, but every time we will identify. If it is monetary perquisite, why it is monetary? If it is non-monetary perquisite, why it is non-monetary? That every time we will identify. See, out of these perquisites, if you remember or recollect, then we have already completed 17 to clause 7 and 17 to clause 7a. Refer this. I am giving you 30 seconds time. Refer this. Yes. Do you recollect? This you have discussed along with Provident Fund. This is Budget 2020 amendment. So 17 to clause 7, 17 to clause 7a we have completed. Now we are moving on to 17 to clause 1. What is that? Rent-free accommodation. Rent-free accommodation. What do you mean by rent-free accommodation? Rent-free accommodation means employer has given you a flat to stay. Employer has given you flat. For example, if you work with any oil sector public sector undertaking, oil PSUs, for example ONGC, Indian Oil Corporation, then they will provide you accommodation to stay. I am not aware about Chennai, but in Mumbai, different parts of the city now, we are having a separate ONGC colony itself. In that colony, there will be buildings owned by ONGC. In those buildings, accommodation is provided to the employees. Yes, RBI quarters also you have. RBI quarters, you also have, if you work with nationalized banks, then you also have bank quarters, police quarters also. Yes, all these are accommodation facility provided by employer to employee. Here we are talking about rent-free accommodation. Here we are talking about rent-free accommodation. Rent-free accommodation means employer is not charging any rent. He has given you accommodation free of cost. He is not charging any rent. That is called as rent-free accommodation. The taxable value of rent-free accommodation. Yes, railway quarters, police quarters, RBI quarters. All these are covered here only. Rent-free accommodation means employer has provided you accommodation and he is not charging you any rent. That is called as rent-free accommodation. If he is charging you some rent, then it is not rent-free accommodation. It is free of cost, it is called as rent-free accommodation. The taxability of rent-free accommodation. First of all, tell me, this is a monetary perquisite or non-monetary perquisite? Which nature of perquisite this is? If you are being provided the accommodation to stay, definitely it is perquisite, but which perquisite? Monetary or non-monetary? Definitely non-monetary. All the non-monetary perquisite, you have to ascertain the monetary value so that it can be added to income from salaries and tax can be levied. In case of non-monetary perquisite, you have to ascertain the monetary value to be added to the salary amount. For ascertaining that non-monetary perquisite, in Income Tax Rules 1962, we are having rule number 3. Which rule we are having? Rule number 3. So, for all the perquisites which are non-monetary in nature, for all the perquisites which are non-monetary in nature, we have rule number 3. So, whenever you come across any perquisite which is non-monetary in nature and you are ascertaining some taxable value by applying some rules, then take it from me that those rules are given where? They are given in rule number 3 of the Income Tax Rules 1962. They are given in rule number 3 of the Income Tax Rules 1962. Now, for the purpose of understanding of this rent-free accommodation, we are dividing this discussion in 2 parts. Number one, when this rent-free accommodation facility is taxable and when it is exempt. First of all, let's move on to the right hand side. Let us discuss which are those situations wherein rent-free accommodation provided to you will not be taxable. In other words, it will be totally exempt from tax. First point says rent-free official residence provided to whom? Provided to union minister. Do you understand union minister? Union minister means the minister of central government. For example, finance minister, health minister, minister of education, minister of textile, all these are union minister. So they are ministers of the central government. Do you know that they will be getting bungalow accommodation to stay? These ministers will be getting bungalow accommodation to stay. That is their official residence. That will not be taxable at all. It is totally exempt from tax. Number two, rent-free official residence provided to leader of opposition in parliament. Leader of opposition also gets rent-free official residence. That is also not taxable at all. Besides, officials of parliament. Officials of parliament will include speaker. Speaker is official of parliament. He will also get official residence to stay. And the benefit will not be taxable at all. It is totally exempt from tax. So basically these people are near to the government. In fact, they have formed the government. Number two, rent-free official residence provided to the judges of High Court and Supreme Court. Judges of High Court and Supreme Court will also get rent-free official residence. And that is also totally exempt from tax, no tax at all. Third point, if accommodation is provided to you, at a mining site, say for example, a worker is working in the coal mine, then it may happen that company may provide them accommodation there only, near to the mining site. So accommodation provided to the employee at a mining site, onshore oil exploration site, project execution site, dam site, power generation site, or any remote area, then it is totally exempt from tax. So if accommodation is provided at these sites, see basically these are your job sites. When you are on the job, you are at this site. On that site itself, if the accommodation is provided, in that case no tax will be levied. This perquisite will be totally exempt from tax. Is that very, very clear? Yes or no? Okay. Let's proceed to point number 4. Point 4 says, if two accommodations are provided on transfer of employee. Two accommodations are provided on transfer of employee, then what will happen? See all these examples, leave, salary, whatever example I took, everything is taken a written here. At the age of 22 years, he has joined an employment, everything, pin to plane, everything is covered in these notes. Explanation sheet will contain everything. Let me move on here. Example number 14. Rent-free accommodation. Double accommodation is provided on transfer of employee. Double accommodation means two accommodations are provided. Now say for example, employee is working with ONGC and his job location is Mumbai. In the month of July, employee is informed that from the month of November onwards, your job location we are transferring to Delhi. Employee has worked for the month of April, he has worked at Mumbai. At Mumbai, company had provided him accommodation to stay. So in the month of April, he is having one accommodation, Mumbai accommodation. May, June also he is having Mumbai accommodation. On 1st July, employee is informed that with effect from 1st November, we are shifting you to Delhi. With effect from 1st November, you have to report at Delhi. In Delhi also, company is going to provide accommodation to employee. But it is not going to happen that on 31st October, employee will leave Mumbai and he'll reach Delhi. In one day, entire shifting cannot be done. Na? This is a permanent transfer for a long span of time from one location to another. So, ONGC company will also provide accommodation to the employee in Delhi. Employee is actually located in Mumbai. In Mumbai, he is already having accommodation. Now he is being informed that with effect from 1st November, you are shifted to Delhi. So what employee has done now? In the month of July itself, he has asked that please provide me accommodation in Delhi. Please provide me accommodation in Delhi so that I can pack my personal belongings and I can call the movers and packers person. He will transfer my personal belongings from Mumbai to Delhi. And when my personal belonging will reach Delhi, those belongings are required to be kept somewhere. So you provide me the accommodation in Delhi so that slowly I will shift all my personal belongings from Mumbai to Delhi and those personal belongings will be kept at accommodation in Delhi. So employer has provided him Delhi accommodation with effect from 1st July. With effect from 1st July, employee has got Delhi accommodation also. And he had two accommodations for the month of July, August, September, October. For 4 months, employee had how many accommodation? Two accommodation. Mumbai accommodation as well as Delhi accommodation. 31st October, he has vacated the Mumbai accommodation and he has got shifted to Delhi. So November onwards, he is having only Delhi accommodation. He doesn't have the Mumbai accommodation. So out of 12 months, April, May and June, first 3 months, he is having only Mumbai accommodation. November to March, 5 months, he is having only Delhi accommodation. What about July, August, September, October, 4 months? 4 months he is having Mumbai accommodation as well as Delhi accommodation. So on transfer of employee, on transfer of job location of employee from one place to another, for a few days, two accommodations are given to employee. For a few days, employee is having double accommodation. Two accommodations are given. What will be the tax treatment in that case? That is what is explained in this example. Provision says up to 90 days means 3 months. Up to 90 days means 3 months. Up to 90 days, any one accommodation is taxable. Up to 90 days, any one accommodation is taxable. What will happen after 90 days? After 90 days, both accommodation are taxable. Perquisite value of both accommodation. Per value of both accommodation is taxable. Up to 90 days, any one accommodation is taxable. So on which accommodation you would like to pay the tax? Any one accommodation would be taxable means the other one would be exempt from tax. The other one would be exempt from tax. So one will be taxable, the other one will be exempt. This will happen up to 90 days. After 90 days, value of both accommodation will become taxable. So, in our example, we are having Mumbai accommodation, we are having Delhi accommodation. Up to 90 days, what will become? What will be the treatment? One accommodation is taxable, one is exempt. Which one you will pay tax and which one you will claim exemption? The accommodation in case of which perquisite value is higher. The accommodation in case of which perquisite value is higher. For that accommodation we will claim exemption. And accommodation in case of which perquisite value is lower, we will pay the tax. This is at the option of the assessee. He has to decide. So definitely he would like to save his tax. So accommodation whose perquisite value is lower, he will pay the tax, and accommodation whose perquisite value is higher, he will claim the exemption. Simple. After 90 days, both accommodation and perquisite value is taxable. Have you understood? Ronak says, sir, how to ascertain the perquisite value? That is what is our discussion. That is what we are going to discuss. Have you understood the provision very clearly? Yes or no? Shall I proceed? So refer this, what it says. Soumya is asking me, sir, July, August, 31 days, na? So what should we take? Should we take 30 days? See, rule says 90 days. So July, August, 31 days should be taken into account. In this rule, now they are not using the word 3 months. They are using the word 90 days. 90 days we generally understand it as 3 months only. But here, since the rule is made in number of days, na, you have to count the number of days for exemption. So July, August, you should take 31 days. Yes. Is that clear? Up to 90 days. Up to 90 days, any one accommodation is taxable. Which one? Having lower perquisite value, we will pay the tax. Higher perquisite value, we will claim exemption. After 90 days, both accommodations are taxable. Is that clear? Point 5. Sorry, point 4. Yes or no? Shall I proceed? Okay. Let's move on to point 5. Point 5 says if on transfer of employee, hotel accommodation is provided. For example, listen to me carefully. You are working with Reliance Industries. You are working with Reliance Industries. And your job location is Mumbai. Reliance Industries has not provided you any accommodation in Mumbai. So where you are residing, you might be residing in your own house. Your job location is Mumbai. You are working with Reliance. Reliance has not provided you any accommodation in Mumbai. So in Mumbai, you are residing in your own house. In Mumbai, you are residing in your own house. Now Reliance is shifting you from Mumbai to Delhi. Are they going to provide you any accommodation in Delhi? No. In Delhi also, they are not going to provide you any accommodation. But is it possible for you to go to Delhi and find out the rented place on the same day? Is it practically possible? Will you catch the flight and go to Delhi directly? You will go to the estate agent office saying that, sir, I want a 1-2 BHK flat on a rental basis. Estate agent will say that, oh, I was waiting for you only. I already have 1-2 BHK flat. This is not going to happen. Therefore, what company will do now? Company has not provided you any accommodation in Mumbai also. Company is not going to provide you any accommodation in Delhi also. In Delhi, you have to stay in rented premises. But since it is practically impossible to get the property on rent in 1 day's time, therefore, in practical life, the companies, the employer would provide you accommodation in a hotel for few days. Employer will provide you accommodation in a hotel for few days. For those days, you go to office. Thereafter, in the evening, you go to estate agent office. Ask him to find a rented premises for you. The moment you get the rented premises, you vacate the hotel and you get yourself shifted to a rented accommodation. So, on transfer of employee, hotel accommodation is provided. What will be the treatment? Up to 15 days in aggregate in a year, it is not taxable. After 15 days, it is taxable. In other words, say for example, company has provided you hotel accommodation for 25 days. Then what will be the treatment? No tax for 15 days. But accommodation is provided to you for 25 days. So whether tax will be levied on the procured value of entire 25 days or only excess 10 days? Answer is excess 10 days. Excess 10 days. So if accommodation is provided for 15 days in a year, which accommodation? Hotel accommodation is provided. Employer has booked a hotel for you. So if a hotel accommodation is provided, and that too on transfer of employee. On transfer of employee's job location from one place to another, if hotel accommodation is provided by the employer for few days, then what will happen? Up to 15 days in aggregate in a year, tax will not be levied. If accommodation is provided for more than 15 days, for excess number of days, tax will be levied. Is that very, very clear? Yes? So this exemption part is over. Now we move on to left hand side, taxable part. See, accommodation can be of different nature. The first accommodation is unfurnished accommodation. First accommodation is unfurnished accommodation. What do you mean by unfurnished accommodation? For example, ONGC has provided you 1 BHK flat to stay. It is only open space. Inside the flat, there is no furniture. No television, no refrigerator, no washing machine. So all these things you have to carry. Only flat is provided. That flat will be called as unfurnished accommodation. Second possibility, furnished accommodation is provided to you. Say for example, employer has just given you a key of the flat to you. 2 BHK flat key is given to you. When you went there, you came to know that the moment you open the door, in the hall there is a sofa set, there is a television, there is a center table. You went in the kitchen. In kitchen there is a gas, there is household utensils, there is a oven. You went in the bedroom, there is a almari, bed, AC installed. All these things are there. In that case, we say it is a furnished accommodation. And third possibility, it is a hotel accommodation. So employer has booked a hotel for you and you are staying in that hotel. See, if you are on a official visit, in that case, any accommodation provided to you, tax will not be levied at all. Why? because there is no personal advantage. If any facility is provided to you for official purpose, then there is no personal advantage, tax cannot be levied. Tax will be levied only if facility is provided for personal purpose, only if there is a personal advantage. Have you understood three types of accommodation? Unfurnished accommodation, furnished accommodation, hotel accommodation. Which one would be the costliest? Definitely hotel accommodation would be the costliest accommodation. Which one would be less costly? As compared to hotel accommodation, furnished accommodation would be less costly. As compared to furnished accommodation, unfurnished accommodation would be less costly. So the cheapest would be unfurnished accommodation, costliest would be hotel accommodation. In other words, in case of unfurnished accommodation, perquisite value should be less as compared to, in case of unfurnished accommodation, perquisite value should be less as compared to furnished accommodation. In case of furnished accommodation, perquisite value should be less as compared to hotel accommodation. Are you understanding? Yes. So let's move on to discuss how to ascertain the taxable value of perquisite in case of unfurnished accommodation. See, whatever taxable value we are ascertaining now, that is termed as taxable value of perquisite. TVOP, taxable value of perquisite. Unfurnished accommodation, now what will be the perquisite value? You should ask a question to yourself, whether you are a government employee or non-government employee. If you are a government employee, then taxable value of perquisite is a license fees, is nothing but a license fees. See, license fees is nothing but the values which are assigned by the state government to different accommodation. Every accommodation would be situated in some of the states, na? So the state government would bifurcate the accommodation by ascertaining certain values to it. Because accommodation can be different accommodations. It can be a 1 BHK accommodation, it can be a 2 BHK flat, 3 BHK flat, it can be a bungalow accommodation. So every accommodation will be assigned some value to classify. People working at, say for example, there are in government, therefore, for example, in government, in a particular department, there are, say, 9 designation. In the entire government department, the people are working at 9 different designations. Hierarchy is at 9 levels. Then government can say that people working at level 1, level 2 and level 3 can take the accommodation up to the value of 5,000 per month. Means government has bifurcated the accommodation. Some values are assigned to the accommodation. If you are an employee working at level 1, level 2 and level 3, then those accommodation for which the value assigned is up to 5,000 per annum, only those accommodation you can select. Only those accommodation you can have. So, license fees is nothing but the value assigned to the accommodation by the state government. This value will be directly given to you in the question. This value will be directly given to you in the question. You are not required to ascertain. You have to just remember that in case of government employee, what is taxable value of perquisite? It is license fees. It is license fees. Now question arises, what do you mean by government employee? Here government employee means central government and state government employee. Government employee means central government and state government employees. Only central government and state government employees would be considered as government employee for the purpose of valuation of rent-free accommodation. Other possibilities, you are non-government employee. RBI employee will come where? RBI employee? RBI employee is non-government employee. Employee of nationalized bank, non-government employee. Employee of government companies like ONGC, BHEL, GAIL, etc. They are non-government employees. Government employee means those people who are getting remuneration directly from the government. I had already explained you this at the time of entertainment allowance. If you recollect, government employee means people working with Army, Navy, Air Force, Indian Postal Service, working with Indian Railways, Income Tax Department, GST Department, State Police, all these are government employees. People working with municipal corporation, they are non-government employees. So if the employee is a non-government employee, if it is a government employee, license fees is taxable. Add the amount of license fees to income from salaries. But if employee is non-government employee, then you have to see whether the accommodation is owned by employer or it is taken on lease by employer. If employer has provided you accommodation in his own building, for example, ONGC is having a lot of building throughout the country, and ONGC has provided accommodation to the employees in that building only. Those buildings are owned by ONGC. Those buildings are appearing on the balance sheet asset side of ONGC. Those buildings are called as owned accommodation. Leased accommodation means ONGC has taken those accommodation on lease and they have given that accommodation to you, to the employees to stay. So basically leased accommodation, they are taken by the employer on a rental basis. Employer might be paying rent for that accommodation. What municipality is? Sarvana, what is your question? Municipality employees are non-government employees. For the purpose of rent-free accommodation, municipality employees are non-government employees. So, non-government employee, taxable value of per quid is ascertained based on whether the accommodation is owned or leased. If the accommodation is owned, then the value of per quid will be decided based on the population of the city in which accommodation is provided to you. If accommodation is owned, then value of taxable value of accommodation, per quid value of accommodation will be decided, will be ascertained based on the population of the city in which accommodation is provided to you. If population is more than 25 lakhs, 15% of salary will be per quid value. Are we finding out the exempt amount here? No. We are ascertaining what? We are ascertaining what will be the taxable amount. Gratuity, committed pension, leave salary, retrenchment, VRS, there we were ascertaining the exempt amount. Here we are ascertaining the taxable amount. Are you understanding the difference now? Yes or no? So here we are asserting the which amount? Taxable amount. If the population of the city in which the accommodation is provided to you is more than 25 lakhs, then 15% of your salary will be per quid value. If the population of the city is more than 10 lakhs, but it is less than equal to 25 lakhs. Population is more than 10 lakhs, but it is less than equal to 25 lakhs, then 10% of your salary will be considered to be the per quid value. If the population is less than equal to 10 lakhs, then 7.5% of the salary will be considered as per quid value. This percentage of salary, this much percentage of salary is considered as a taxable value, per quid value of the accommodation. So this much amount will be added to your salary income and tax will be levied. Yes, is that very, very clear? Yes or no? Let's move on to next part. If the accommodation is leased accommodation. Leased accommodation means the employer has taken that accommodation on rental basis and he has provided you that accommodation to stay. In that case, per quid value will be, you take the highest percentage out of this table. From the owned partner, you take the highest percentage, that is 15% of salary. Compare that with actual rent paid payable by the employer. Employer has taken the accommodation on rental basis, so he might be paying rent for that. So that amount of rent paid payable, you write in point number 2, then you select point 1, point 2, whichever is lower. You select point 1, point 2, whichever is lower. See, generally, for ascertaining the taxable amount, we calculate 1, 2 or 3 amounts, and out of those 2, 3 amounts, we select whichever is higher. And for the purpose of computation of exemption and deduction, we would calculate 2, 3 amounts, and we would select whichever is lower. That is what is the normal understanding. But here, the provision is going against our normal understanding. They are saying you that you ascertain the perquisite value to be lower of point 1 and 2. Generally, whenever we ascertain the taxable amount, we select higher of 1 and 2. This time we are selecting, this is an exceptional situation. Here we are selecting lower of point 1 and 2. Have you understood this? You may think why so, because this is a non-monetary benefit. This is the non-monetary benefit. Employee is not receiving money, he is receiving non-monetary benefit. So if you charge more tax, the tax will be pinching him. Therefore government says forget about it, we will not levy tax on higher amount, we will levy tax on lower amount. Is that very, very clear? Shall I ask you a question? I have not completed the discussion of this entirely, but here only I want to ask you a question. Open book examination, listen to the question very, very carefully before answering. Listen to the question, think about it and then answer. Say for example, question says, X Limited has provided accommodation to Mr. X. X Limited has provided a leased accommodation in the city of Mumbai to Mr. X. X Limited has provided. Let me ask you 2-3 questions. Let me ask you 2-3 questions. Question number 1. X Limited has provided accommodation to employee in Mumbai. Now tell me, what will be the perquisite value? X Limited has provided accommodation to employee in the city of Mumbai. What will be the perquisite value? Yes? What will be the perquisite value? Now some people are thinking, sir, accommodation is owned or leased. That is not mentioned, But that is not mentioned. If that would have been a leased accommodation, then the examiner should also give you information with respect to rent paid by the employer, He has not given the information with respect to rent paid by employer. Means definitely it is a owned accommodation. If it is owned accommodation, Arun, I told you that X Limited has provided accommodation to Mr. X in the city of Mumbai. Where did I tell you that it is a leased accommodation? If at all it would have been a leased accommodation, I should have given you the actual rent paid by employer also. Are you understanding? Yes or no? So what is the answer? It is a owned accommodation. But population is not given to you. Population is not given. So do you have a doubt that population of Mumbai is less than 25 lakhs or more than 25 lakhs? Do you have any doubt on that? Definitely more than 25 lakhs. Definitely more than 25 lakhs. So more of the story is, if they don't tell you whether it is a leased accommodation or owned accommodation, then how do you identify? If the rent paid by employer is not given the question, then it is a owned accommodation. And if they use some metro city like Mumbai, Delhi, Kolkata, Chennai, then definitely population is more than 25 lakhs. You should not have any doubt on it. So you should take 15% of salary as perquisite value. Have you understood this? Yes or no? Okay. Let me ask you one more question. Now this time listen to me carefully. Other than metro, they will have to provide you the population, madam. Other than metro, they will have to provide you the population. Metro population is more than 25 lakhs, that is implied. Now I am asking you second question. Listen to me very carefully. Question says, Mr. X has been provided the leased accommodation in the city of Kanpur, where the population is 12 lakhs. What is taxable value of Parkudal? Mr. X has been provided a leased accommodation in the city of Kanpur, where the population is 12 lakhs. What is the taxable value of Parkudal? I have got answers from 3 people. All of them are correct. Here by mistake, don't tell that it is 10% of salary. Don't get carried away by the word population. You have to find out whether it is owned accommodation or leased. Accordingly, you have to answer. If it is a leased accommodation, population is not a relevant factor to be taken into account. So in case of leased accommodation, answer is 15% of salary on actual lease rent paid payable. Intentionally, with an intention to create the confusion, examiner will make a question wherein a leased accommodation is provided and he will also give you population. So if you give answer as per population, then it is wrong. So this we have understood. Point 1, unfurnished accommodation story is over. Now we move on to point 2, furnished accommodation. Furnished accommodation, the valuation is required to be done in 2 parts. Furnished accommodation, valuation of perquisite is required to be done in 2 parts. Part 1, you do the valuation as if the accommodation is unfurnished. Part 1, you do the valuation as if the accommodation is unfurnished. You do the valuation as if the accommodation is unfurnished. Means as already discussed. Discussed where? Here. So do the valuation as if the accommodation is unfurnished. Thereafter, find out the perquisite value of furniture separately. Find out the perquisite value in case for furniture separately. Then you add up both the values. Perquisite value of unfurnished accommodation, perquisite value of furniture. You add up both the values. So perquisite value of unfurnished accommodation should be found out as per point number 1. Perquisite value of furniture should be found out separately. You see whether the furniture is owned or leased. If the furniture is owned, then you take your favorite method of depreciation and favorite rate of depreciation. What is your favorite method? SLM. On that you calculate depreciation of what? Original cost. That original cost is called as actual cost in income tax. On that you apply your favorite rate of depreciation, 15%. So if owned furniture is provided by employer to you, then you take the perquisite value as 10% per annum of actual cost. If leased furniture is provided by employer to you, then you take actual hire charges paid payable by employer. You take what? Actual hire charges paid or payable by employer. Is that very, very clear? Yes or no? Now let's move on to the last part, that is hotel accommodation. Hotel accommodation, don't ask me whether it is owned or leased. Hotel accommodation will be of which nature? Definitely it will be leased only. Correct? So what do you do now? From this leased accommodation now we are copying. Same rules we are copying from here. This is also leased accommodation. Hotel accommodation is also leased. We are taking same rule here. But since hotel accommodation is costlier now, we are replacing this 15 percentage by 24 percentage. So in case of hotel accommodation, taxable value of perquisite is lower of 24% of salary or actual higher charges paid payable. In case of hotel accommodation, taxable value of perquisite is lower of 24% of salary or actual higher charges paid payable. Yes, have you understood this? Yes or no? Okay. Now a general question will come to your mind. General question will come to your mind. Everywhere here it is written 15% of salary, 10% of salary, 7.5% of salary, 24% of salary. What do you mean by salary? Dikshit, license fees will be given to in the question directly, you are not required to ascertain. License fees is ascertained actually as per the state government rules. There are certain rules which are made by this state government. As per that, license fees is ascertained. Our job is not to ascertain the license fees. License fees will be given to in the question. Now see everywhere. See right now our job is not to find out the exemption. Our job is to find out the taxable value of this accommodation. Everywhere we have written 15% of salary, 7% of salary, 10.5% of salary, 24% of salary. Based on salary, we are not calculating exemption. Based on salary, we are calculating taxable value. But the question is, what all things should be taken in salary? What all things should be taken in salary? Everywhere we had a separate definition of salary now. Till now we have learned a lot of definition. We had separate definitions of salary. So here, what is the definition? Here in the definition of salary, they have given you list of inclusion. Here in the definition of salary, what all things are required to be included in salary for the purpose of valuation of perquisite. They have given you the list of inclusion as well as the list of exclusions. Inclusion is also given, exclusion is also given. And the problem is, when you read both now, then you forget what to include, what to exclude. Those things which are required to be included, by mistake will exclude. And those things which are required to be excluded, by mistake will include. But in both cases, examiner is going to exclude you. So, to remove the confusion, what should we do? We should just remember what is required to be excluded. And there are 5 points here. There are only 5 points in the list of exclusion. You remember that? Besides that, everything should be included. Besides that, everything should be included. What is first exclusion? Dearness allowance ordinary should be excluded. Dearness allowance ordinary should be excluded means what? Means dearness allowance recognized should be included. Dearness allowance ordinary should be excluded means dearness allowance recognized should be included. Number 2, employer's contribution to provident fund. Employer's contribution to provident fund should be excluded. Number 3, allowances which are exempt. Allowances which are exempt should be excluded, meaning thereby allowances which are taxable should be included. Allowances which are exempt shall be excluded and allowances which are taxable should be included. Fully taxable allowance should be fully included. Fully exempt allowance should be fully excluded. Partly taxable, partly exempt allowance, taxable portion should be included, exempt portion should be excluded. Point 4. Perquisites should be excluded. You are ascertaining the value of perquisite only. While ascertaining the value of perquisite, how can you include the perquisite? Therefore, perquisite is required to be excluded. Point number 5. Lump sum receipts. Lump sum receipts. Lump sum receipts like gratuity, commuted pension, leave salary, retrenchment, VRS, provident fund balance withdrawn, all these things are required to be excluded. So 5 points you have to exclude. DEAPL. 5 points you have to exclude. Dearness allowance ordinary, employer's contribution to provident fund, pension fund, allowances which are exempt, perquisites and lump sum receipts. These 5 things are required to be excluded. All other components should be included. All other components of salary should be included. Uncommuted pension should be included or excluded. Rizwan, there will not be any uncommuted pension. Why na? Because this accommodation you will get only when you are doing job na. After you retire, who is going to provide you accommodation? After you retire, who is going to provide you accommodation? In fact, pension will not be there only. Accommodation is provided while you are in service. After you retire, no one is going to provide you accommodation. Ronak, wait for some time. So, salary exclude these 5 things. DNS allowance ordinary should be excluded. Employer's contribution to provident fund should be excluded. Allowances which are exempt should be excluded. Perquisite should be excluded. Lump sum payment should be excluded. Now we move on to the last 2 points. Then we have a practical question on this. Gratuity on service period to include or exclude. Gratuity received while in service should be included. Sarvanna, gratuity received while in service should be included. Gratuity which is in the nature of lump sum amount, which is received on retirement, should be excluded. Is that clear? Okay. Now listen to me carefully, because we are discussing 2 important points which are applicable here in rent-free accommodation also, as well as in house rent allowance. Salary is taxable on which basis? While you compute income from salary, salary is taxable on which basis? Due or received, whichever is earlier. So the question is whether advance salary is taxable. Yes, advance salary is definitely taxable. In case of advance salary, salary is received earlier than it became due. In case of advance salary, receipt is earlier than due. But very important point is, while you compute salary, this one, for the purpose of ascertaining the perquisite value, while you ascertain the amount of salary, with an intention to find out the perquisite value in respect of accommodation, na, this salary should be taken on due basis. This salary should be taken on due basis. In other words, advance salary should not be taken into account here. Because your intention is not to compute the income from salary amount. Your intention is to compute the taxable value of perquisite amount. Your intention is to compute the taxable value of perquisite amount. So, this salary is required to be taken on due basis. This salary is required to be taken on due basis. Yes, is that very clear? So this point is over. This point is equally applicable in case of house rent allowance also. In house rent allowance, you take na salary equals to basic salary, DA recognized turnover commission. That salary should also be taken on due basis. In other words, any advance salary should not be taken up here in that amount. So while you are asserting the amount of salary, either for the purpose of exemption of house rent allowance or for the purpose of asserting the perquisite value of rent-free accommodation, you should assert in the salary amount on due basis. Any advance salary received by you should not be taken into account. Second point I have explained you in very much detail while explaining you exemption with respect to house rent allowance. The same logic is applied here. If there is any change in any component of salary, then columnar calculation should be made. Do you recollect? While explaining you house rent allowance, I told you that HRA exemption depends upon 6 factors. If all those 6 factors are constant throughout the year, then you make the exemption calculation by putting the single column. But if any of the factor changes, then HRA exemption calculation should be done by putting a multiple column. Similarly, here also, if the factors are changing, which factors? The factors which are required to be taken as part of inclusion. If these factors are changing, then you have to do multiple column calculation. But here we are not doing multiple column calculation for the purpose of ascertaining the exemption. Here we are doing the multiple column calculation with the intent to find out the perquisite value. With the intent to find out the taxable value of perquisite. We are not asserting the exemption, we are asserting the taxable amount. Is that very, very clear? Yes or no? Let's move on to the last point. Last point I am explaining you. You will feel that it is illogical. But this is what it is. Even if you feel illogical, you have to accept this. Actually, it is not illogical, it is logical only. But you may feel that it is illogical. For example, listen to me carefully. For example, Ishwar has completed his chartered accountancy. He is doing 2 jobs simultaneously. He is doing 2 jobs simultaneously. Morning he is working as a lecturer in college on a full-time basis. And the college timings are morning 7 to 11:30. But he has done some setting with the principal and is leaving the organization by 10:30. So all his lectures are planned up to 10:30. Every day 7 to 10:30 he takes the lecture and he goes away. He is also working with a company, he is working with ONGC. He is working with ONGC, there the office timing is 11 o'clock. So he reaches the office at 11 o'clock and he works till 8 p.m., 9 p.m. So he is doing how many jobs? He is doing 2 jobs simultaneously. So he would receive salary from how many employers? He would receive salary from 2 employers. College has not provided him any accommodation, but ONGC company has provided him accommodation. Now the question is, while you ascertain the perquisite value of accommodation. Will you take salary received from ONGC, or you will take salary received from ONGC as well as salary received from college? Should you take salary received from both the employers, or should you take salary only from that employer who has provided you accommodation? First of all, have you understood the question? So answer is what? Answer is you should take salary from both the employers. You should take salary from both the employers. If employee is working with two employers simultaneously, then salary from both employers should be considered for the purpose of valuation of accommodation. Is that very, very clear? Yes or no? This was which section? Section 17, subsection 2, clause 1, rent-free accommodation. To this section 17, subsection 2, clause 2 is connected, closely connected. So this will complete in 5 minutes time, maximum. Maximum 5 minutes time we can complete this. What is the difference between 17 to clause 1 and 17 to clause 2? 17 to clause 1 is a rent-free accommodation. Means the employer has provided you accommodation to stay and he is not charging any rent. Employer has provided you accommodation to stay and he is not charging any rent. In that case, we say it is a rent-free accommodation. But if employer has provided you accommodation and is charging some amount as rent, then we say that there can be a concession. There can be a concession. For example, employer has provided you 3 BHK flat in the city of Chennai and is charging you rent of 3,000 per month. Do you believe there is a concession? Employer has provided you 3 BHK flat in the city of Chennai as accommodation and is charging you 3,000 rupees per month as rent. Do you believe there is a concession? You may believe so, but your belief may prove to be wrong. Why? Because what you have done now, this 3,000 is what? Amount charged by employer, or we can call this as amount recovered from employee. Amount charged by employer can also be called as amount recovered from employee. Here what you are comparing now? You are comparing what amount employer has recovered from you with the market rent. What rent is going on in the market for 3 BHK flat? Now that you are comparing. Market rent should not be taken into account for the purpose of comparison. Market rent, actually you are comparing this amount recovered for employee with market rent. Market rent means rent which is going on in the market. If you want to get 3 BHK flat on rental basis, how much rent is going on in the market? That is called as market rent. So you are comparing this amount recorded by employer from employee with the market rent. This comparison is not correct. Fair market rent should not be taken into account for the purpose of comparison. Then how the comparison is required to be done? Comparison will be done of 2 factors. Factor number 1, how much amount your employer is recovering from you, also called as amount recovered from employee. This is required to be compared with value determined as per rule 3 sub rule 1. Where is that value determined as per rule 3 sub rule 1? That is what we ascertained here na flow chart. Rent free accommodation. Oh, unfurnished accommodation, furnished accommodation, hotel accommodation, government employee, non-government employee, owned, leased, all these things, different rules, na? This is nothing but rule 3, sub rule 1 only. I told you, na, valuation of perquisite is rule 3. Valuation of perquisite is rule number 3. So the value which is decided, ascertained, value which is decided, given here is nothing but rule 3. So you take that amount of rule 3 sub rule 1, compare with amount recovered from employee. Now, for example, value determined as per rule 3 sub rule 1. Value determined as per rule 3 sub rule 1 is 1,20,000. And your employer is recovering 7,500 per month from you. If he is recovering 7,500 from you per month, throughout the year he might be recovering how much? 90,000. This 90,000 is amount recovered from employee. So, rule 3 sub rule 1 value is 1,20,000, whereas employer is recovering only 90 from you. So, what is the advantage? What is the benefit received by you? Difference of that, 30. Difference of that, 30 will be considered as perquisite value. So, taxable value of perquisite will be 120 minus 90, that is 30. So, to ascertain whether there is a benefit or not, to ascertain whether there is a concession or not, we are not doing the comparison with the market rate. We are doing the comparison with value determined as per rule 3. Value determined as per rule 3 is compared with amount recovered from employee. Is that very clear? Yes or no? Okay. So if value determined as per rule 3 sub rule 1 is greater than amount recovered from employee, then yes, there is a concession. If there is a concession, ascertain the amount of concession. That amount of concession is nothing but taxable value of perquisite. So taxable value of perquisite is value determined as per rule 3 sub rule 1 minus amount recovered from employee. In our example, value determined as per rule 3 sub rule 1 is 1,20,000. Less amount recovered from employee is 90. So 120 minus 90, 30. Perquisite value is 30. Is that very clear? Yes. Let's move on to the second situation. If value determined as per rule 3 sub rule 1, say for example, I tell you that rule 3 sub rule 1 value is 1,20,000 and employer is recovering from you 12,500 per month. Amount recovered by employer from employee is 12,500 per month. So how much he is recovering from you throughout the year? 1,50,000. So is he recovering more or less? Is he recovering more as compared to rule 3 sub rule 1 or is recovering less? He is recovering more. So in that case we say that there is no concession. There is no concession. If there is no concession, nothing is taxable. Taxable value of perquisite is 0. But yes, if you compare with market rent, there might be a concession. But comparison is not required to be done with market rent. Comparison is required to be done with value determined as per rule 3 sub rule 1. Value determined as per rule 3 sub rule 1 is required to be compared with amount recovered from employee. Is that very clear? Yes. So we have completed section 17, subsection 2, clause 1, rent-free accommodation. We have also completed section 17, subsection 2, clause 2, concessional accommodation. 17 to clause 1, rent-free accommodation, and 17 to clause 2, concessional accommodation. Both are over. Both are over. We have one practical question on this. We'll have a break after this, na? After the question. We'll have a break after the question. Yes? We'll solve this question, na? It is related to this same provision. If I give you break right now, you will forget the provision. Yes? So let us proceed. Quickly we will solve question number 8. X received the following emoluments. What do you mean by emoluments? Emoluments means benefits. X received the following emoluments during the previous year ending 31st March 21. Basic salary 9 lakhs. Basic salary 9 lakhs. My question to you is this 9 lakh is per month or per annum? Whenever question is silent, all the amounts which are given the question should be considered to be yearly amounts, per annum amounts, because you are calculating income for per annum only. If the amounts are per month, then examiner would clearly mention those against that amount, he will clearly mention as per month. If nothing is mentioned, those amounts should be considered to be per annum. So basic salary is 9 lakh per annum. Dearness allowance is 90,000 per annum, not forming part of salary. Not forming part of salary means this is ordinary dearness allowance, should not be taken into account. Bonus 74,000, commission 40,000. Here they have written commission, whether this is turnover commission or fixed commission is not written. His employer provides the following perquisites: a rent-free furnished house in Cochin. It is not unfurnished house, it is a furnished house, and it is rent-free, provided free of cost. But we have to find out whether this is owned accommodation or leased accommodation. That is what you have to find out. In the table, first line says leased rent of unfurnished house per month. Now they are using the word per month. Lease rent of unfurnished house per month is 41,000. So this is which accommodation? This is leased accommodation. What should be the perquisite value in case of leased accommodation? 15% of salary or actual lease rent paid payable, whichever is lower. 15% of salary or actual lease rent paid payable, whichever is lower. Correct. Next, cost of steel furniture provided. Cost of steel furniture provided is 14,000. WDV is 12,000. See, steel furniture cost is given to you. Cost. Why they have given you the cost now? Because this might be owned furniture. This might be owned furniture. So you have to take depreciation. 10% depreciation, 10% per annum. Then in the next line they say rent of furniture provided. This is not a owned furniture. This is a leased furniture. Therefore, they have given you the rent. So this entire 17,000 should be taken into account. For owned furniture, you should take 10% of 14,000. That will be 1,400. Are you understanding? Next, motor car expenditure of employee reimbursed by employer. Motor car expenditure of employee reimbursed by employer na. This is considered as perquisite. This is perquisite. What question is asking you? Determine the value of perquisite in respect of rent-free furnished house in following three situations. So question is not asking you to calculate income from salary amount. Question is just asking you to ascertain the amount of perquisite value in respect of rent-free accommodation. Possibility A, case A, they say X is an officer of government of West Bengal and 18,000 is the license fees of unfurnished house as per the state government rules. Now you tell me, you have to ascertain value of what? You have to ascertain the value of rent-free furnished house. This license fees is for what? This license fees is for unfurnished house. Unfurnished house. So can you tell me what will be the perquisite value? In situation A, when the employee is a employee of government of West Bengal, what is the perquisite value of unfurnished house? License fees. What is the license fees? 18,000. You take that 18,000. To that 18,000, you add 10% of cost of furniture. To that 18,000, you add 10% of cost of furniture. That is 1,400. You also add this rent of 17,000. If you add up all these amounts, what you will get? Value of rent-free furnished accommodation. And that will be how much? 36,400. 36,400. Yes, have you all understood very clearly? Yes or no? Yes. So case A answer is what? 36,400. 18,000 plus 1,400 plus 17,000 is 36,400. Let's move on to next. X is an officer of Indian Airlines. Officer of Indian Airlines. He is a government employee or non-government employee? Yes. Officer of Indian Airlines. Is he a government employee or is he a non-government employee? He is non-government employee. For the purpose of valuation of accommodation, government employee means only central government and state government employees. That's all. For the purpose of valuation of perquisite, government employee means only central government and state government employee. Therefore, officer of Indian Airlines would be considered as non-government employee. Case C. Case C says X is a managing director of private sector company. X is a managing director of private sector company. Managing director of private sector company, non-government employee or government employee? Yes. Managing director of private sector company, non-government employee. Oh, non-government employee. So do you believe that in case B and case C answer is going to remain the same? If you say that employee of Indian Railways is a non-government employee and at the same time you say that private sector employee is also non-government employee, then do you believe that answer in case B and case C will remain the same? So correct answer is yes. Answer in case B and C is going to remain the same. Don't think how the examiner can give two situations having the same answer. He can do anything. He is going to play with your mentality. He is going to disturb your thought process. You should be very much clear. So answer in case number B and case number C would remain the same. Now let's ascertain now first of all you tell me, we have to find out the perquisite value of which accommodation? Furnished accommodation. So we'll do the calculation in two parts, correct? valuation of rent free furnished accommodation. This calculation will be divided in two parts. Part A, valuation of accommodation, and part B, valuation of furniture. So part is valuation of unfurnished accommodation, and then part B will have valuation of furniture. Now tell me, it's an owned accommodation or leased accommodation? Leased accommodation, na? Yes or no? So what is perquisite value? 15% of salary or actual lease rent paid payable, whichever is lower. 15% of salary or actual lease rent paid payable, which is lower. In salary, what we are going to take? What will be taking in salary? Will we take basic salary? Yes. How much? 9 lakhs. Should we take dearness allowance? No, because it is ordinary. Should we take bonus? Yes. 74,000. Should we take commission? Yes. 40,000. Thereafter, everything which is given inside the tabular presentation is perquisite only, and perquisite is not required to be taken. So just take the total, 10 lakhs 14,000, multiply by specified percentage, 15%. What is the amount? 150 to 100. $150 to 100. This will be compared with what? This is what? This is 15% of salary. This will be compared with actual lease rent. Actual lease rent is how much? 41,000 per month. So for 12, 41,000 is per month, Soumya. So it is 492. Now we have to select lower. Lower of 1 and 2. $150 to 100. 150 to 100 is lower. This is the value of what? Unfurnished accommodation. Now part B, we should do the valuation of furniture. Yes or no? In that also two part. Owned furniture. 14,000 to 10%. 1,400. And second one would be leased furniture. 17,000. Take the total 18,400. So what is the perquisite value of rent free furnished accommodation is nothing but A plus B. So 150 to 100 plus 18,400 is 1,70,500. Yes. Is that very clear? Solution is already given to you, I think. Yes, on page number 72. Solution is given to you. So we have completed the discussion of section 17 to clause 1, 17 to clause 2, 17 to clause 7, 17 to clause 7a. Correct? Yes. So we'll have a break till 12:30. We'll have a break. Yes. Now, anyone of you are having any doubt? Anyone of you are having any doubt? Then you can ask me right now. Others can enjoy the break. But if you are having any doubt, you can ask me right now. Now, Darshini, what difference does it make? 3-4 minutes. You go and have a break till 12:34. I don't mind. Any one of you having any other doubts? No. Rizwan says 17 to case 1 means Rizwan here. Case 1. Case 1 में what we are doing now? We are taking value determined as per rule 3 sub rule 1. Value determined as per rule 3 sub rule 1. In our example, in this question we solved now. What is the answer? In this question, what is the answer? 170,500. This 1,70,500 is what? Value determined as per rule 3 sub rule 1. This 1,70,500 is nothing but value determined as per rule 3 sub rule 1. Value determined as per rule 3 sub rule 1, correct? Now this you have to compare. This you have to compare with what? With amount recovered from employee. Now say for example your employer is recovering 15,000 per month. So yearly he is recovering how much? 15,000 to 10, 1,80,000. He is recovering 180. So now you tell me he is recovering more or he is recovering less? He is recovering more now. More than 170,500. He is recovering 1,80,000. So what is the concession available to you? There is no concession. So there is no tax. Nothing is taxable. Second possibility is employer is recovering 10,000 per month from you. He has given you accommodation to stay and he says that you have to pay me rent of 10,000 per month. So yearly amount how much he is recovering? He is recovering 1,20,000. Whereas the value determined as per rule 3 sub rule 1 is 1,70,500. So what is the difference? 50,500. That 50,500 will be considered as perquisite value. Rizwan, have you understood? So, if you refer to list of perquisites given to you on page number 36, if you refer to list of perquisites given to you on page number 36, then first and second is over. 17 to clause 1, rent free accommodation. 17 to clause 2, concessional accommodation, both are over. And both are non-monetary perquisites. 17 to clause 3, clause 4. Clause 3 we will cover later. I am right now moving on to 17 to clause 4. Clause 3 we will cover later. Right now, I am moving on to 17 to clause 4. Clause 4, clause 5, clause 6. Within next 15-20 minutes, we are going to cover these three perquisites. Okay. 17 to clause 4. At the beginning of the discussion of perquisite, I told you that perquisite can be either monetary perquisite or non-monetary perquisite. 17 to clause 7, that is employer's contribution to approved superannuation fund, recognized provident fund, and employer's contribution to national pension scheme. Aggregate contribution in excess of 7,50,000 will become taxable. That was a monetary perquisite. 17 to clause 7A, budget 2020 amendment proposed an interest to the extent of taxable contribution, to the extent of taxable employer's contribution will also become taxable. That is also a monetary perquisite. Whereas 17 to clause 1 and clause 2, rent free accommodation and concessional accommodation, they are non-monetary perquisite. They are non-monetary perquisite. So, now we are moving on to one more monetary perquisite, that is 17 to clause 4. It says value of any monetary obligation of employee discharged by employer. Value of any monetary obligation of employee discharged by employer. Monetary obligation means any payment which is the duty of employer to make the payment, but payment is made by employer. In that case, we say that monetary obligation of employee is met by employer. If it is the duty of employee to make the payment, and if that payment is done by employer, then we can say that it is monetary obligation of employee met by employer. Such situation can arise only when any personal expense of employee is paid by employer. Any personal expense of employee is paid by employer. We can have n number of different examples here. For example, employee's hospital bill is paid by employer. Employees' children school fees are paid by employer. Employees' house electricity bill is paid by employer. Employees' profession tax is paid by employer from his own pocket. Employees' income tax is paid by employer. Basically, any personal expense of employee which is paid by employer will be covered by section 17 subsection 2 clause 4. Besides that, if it is not paid by employer, if it is paid by employee himself, but later on it is reimbursed by employer, then also it will be covered by 17 to clause 4. So how do we identify whether the perquisite is covered by 17(2) clause 4. They will say that the payment is made by employer or amount is reimbursed by employer. In that case, we said that it is covered by 17(2) clause 4. So it says wherever any monetary obligation of employee is discharged by employer, which otherwise would have been payable by the employee, it is considered as a perquisite and it is taxable in the hands of all employees. What do you mean by all employees? For the time being, forget about that. That we will discuss later on. Value of these perquisites is actual expenditure incurred by employer in this regard. Example, salary of domestic servant which is engaged by employee is paid by employer. Either it is paid by employer or reimbursed by employer. Gas, electricity, water supply charges of employee paid by employer, paid in respect of connection in the name of employee. Children education expenses of employee are either paid by employer or they are reimbursed by employer. Medical expenses of employee paid by employer, reimbursed by employer. Income tax or profession tax of employee either paid by employer or reimbursed by employer. Simply we can say that any personal expense of employee, if it is paid by employer, any personal expense of employee, if it is paid by employer, it would be treated as monetary obligation of employee paid by employer. It will be taxable in section 17 subsection 2 clause 4. It will be taxable in section 17 subsection 2 clause 4. Is that very clear? Okay. So 17(2) clause 4 is any monetary obligation of employee, any personal expense of employee paid by employer or reimbursed by employer, that amount will be added to employee's salary income and tax will be levied on it. So it is 17(2) clause 4. It is a monetary benefit. Next is 17(2) clause 5. 17(2) clause 5 says any sum payable by employer, to effect an assurance on the life of employee or to effect a contract for an annuity. In simple language, employer has paid life insurance premium of employee. See, basically life insurance policy premium of employee, if it is paid by employer, definitely it is covered by 17(2) clause 4 itself. Why there is a need to make a separate clause 17(2) clause 5? Because 17(2) clause 4 uses the word paid or 17(2) clause 4 uses the word reimbursement, whereas 17(2) clause 5 uses the word payable. In other words, even if this is payable, then also it will be considered as a perquisite. Meaning thereby, for example, employer has taken out the life insurance policy for employee. Employee has not taken out the policy. If employee has taken out the policy and employer is paying the premium or employee is paying the premium and employer is reimbursing that, then it will be covered by 17(2) clause 4. It will become taxable only on actual payment by employer or reimbursement by employer. But 17(2) clause 5, life insurance policy itself is taken by employer for the benefit of employee. Life insurance policy is taken on the life of employee, but the policy is taken by employer. If policy is taken by employer, it is certain that who is going to pay premium? Employer is going to pay premium. In that case, that amount of premium should be added to employee's income, irrespective of whether the premium is paid by employer or it is outstanding. Whether the premium is paid by employer or it is outstanding, in both the cases, that amount of premium should be added to employee's income. Because the word used here in 17(2) clause 5 is payable. In medical expenses, is there any limit? No, there is no limit. Arun, earlier there was a limit, now there is no limit. That limit is removed. 3 years back we had a limit of 15,000, but that limit is removed now. Now there is no limit. Is that clear? Yes. 17 to clause 4. Any personal expense of employee. 17 to clause 4 says any personal expense of employee paid by employer will be considered as employee's income and tax will be levied. 17 to clause 5 says if employer has taken out a life insurance policy in the name of employee, even though premium is not paid, it is payable, that amount will be added to employee's income. Deva is asking me question, sir, then sum assured will be given to employee only. Correct. Sum assured will be given to employee. Sum assured will be given to employee only. Yes. Arun says in my material, in May 21, it is given 15,000 in Telegram channel. No. If it is given in that manner, it is wrong. I will check it. I will check today only. But if that limit is given 15,000, that is wrong. That is not applicable as of now. Which page you just send me that? You are having my number, WhatsApp number. You can send me that file. Page number you can write. I will appropriately change. Arun? Are you getting my voice? Send me the page number. 17 to clause 4, 17 to clause 5 is over. Now let's move on to 17 to clause 6. 17 to clause 6. First of all, tell me, in accountancy, have you completed the chapter of ESOPs? In CA intermediate, you are having ESOPs, na? Employee stock option plan or employee stock option scheme. You have completed, very good. So, say for example, there is an employer. There is an employee. Employer is offering either shares or securities under employee stock option plan or employee stock option scheme. Employer is offering either shares or securities to the employee under employee stock option plan or employee stock option scheme. Let me take an example. See, employer is offering either shares or securities to employee means either he will offer the shares free of cost or he will offer the shares at a price which is less than the market price. He will offer the shares to employee at a price which is less than the market price. Now say for example, employer has offered shares to the employee. Employer has offered shares to the employee. For that, employer has to make a scheme for offering shares to employee. Employer has to make a ESOP scheme. Once the ESOP scheme is made, ESOP scheme will be explained to the employees. A meeting will be called of all the employees. ESOP scheme will be announced. Terms and conditions of the ESOP scheme will be explained to the employee. And every employee will be explained how many shares or how many securities you can purchase or at what price you can purchase, how much amount you are expected to pay to the company. All these things will be explained. A separate meeting will be called for this and all these things will be explained to the employee. The date on which this meeting is called, to explain all the terms and conditions of the ESOP scheme to the employee, that date is called as date of announcement of scheme. That date is called as what? That date is called as date of announcement of scheme. Now say for example, let me give you very specific information. Saying that employer is offering shares. Shares are offered by employer to employee at the rate of rupees 250 per share. Shares are offered by employer to employee at the rate of 250 per share. How many shares are offered now? Employee can take 1000 shares. If you want to purchase the shares now, he has to pay 250 rupees per share, and he can maximum purchase how many shares? 1000 shares. He cannot purchase more than that. All these terms and conditions now will be explained to employee. A separate meeting will be called for that. And the date on which that meeting is called, that date will be called as date of announcement of ESOP scheme. Say for example, the date of announcement of scheme is 1st July 19. 1st July 19. An employee has to exercise the option in the ESOP scheme within a period of 1 year. Employee has to exercise the option for purchasing the shares at 250 rupees per share within a period of 1 year time. Now say for example, on this 1st July 19, fair market value means market price of the shares on the stock exchange was rupees 600. So the question is, will you purchase the shares? Shares having a market price of 600 are offered to you at 250 rupees. Will you purchase? Definitely yes. Because it appears that there is a profit on this. 350 rupees per share, there is a profit. So you will purchase. What is the time given to you to purchase the shares? 1 year. 1 year is the exercise period. So whenever you want to purchase the shares, you have to pay 250 rupees per share for 1000 shares. And 1000 shares will be allotted to you. Now say for example, you have applied for shares. Means you have exercised your option. That date will be called as date of exercising the option. Means we can also call this as date of application. Date of application. On this you have applied for shares. On this date you have applied for shares. Now say for example, this date is 15th March 2020, and on this date fair market value is say 950 per share. Fair market value is 950 rupees. So the day on which company had offered you the shares, on that day the price was 600 per share. The day on which you exercised the option, the day on which you applied for the shares, by paying 250 rupees per share. On that day, the price was 950 per share. Once you have applied, company will allot you the shares. The day on which shares are allotted will be called as date of allotment of shares. Say for example, date of allotment is 15th April. Within 1 month, the shares are allotted. Within 1 month, shares are allotted to you. 15 April 20. On this 15 April 20, fair market value is rupees 1250 per share. Fair market value is how much? 1250 per share. Now the question is, what is the benefit derived by you? What is the benefit derived by you? Your benefit is a difference of 250 and 600. If you take the difference of 250 and 600, the benefit is 350. If you take the difference of 250 and 950, then the benefit is 700 rupees per share. If you take the difference of 1250 and 250, then the benefit is 1000 rupees per share. Are you understanding? So the point is, for the purpose of comparing, for the purpose of ascertaining how much is the benefit derived, you have to compare how much amount your employer is recovering from you. How much amount employer is recovering now? He is recovering 250. This is required to be compared with the fair market value. What is the price of those shares going on in the market? But you have three different prices now. You have three different prices of three different dates. Which prices should you compare? The date of announcement of scheme, what was going on in your market is, on the date of announcement of scheme, what was going on in your mind is 600 rupees per share. The day on which scheme was announced, on that date, what you were thinking, I'll get a benefit of 350. So I should apply. But the date on which you went to apply, on that date market price was 950. So now what is going on in your mind? Difference of 600 and 250 is going on in your mind, or difference of 950 and 250 is going on in your mind? Definitely the difference of 250 and 950. Why you are not thinking about 1250? On 15th March when you apply, how can you think about 15th April? If in the month of March you know what is the price what will be the price in the month of April, then you will not do job now. Then you will take up investing in shares as your profession. The 15th of March, you do not know what is the price, what will be the price on 15th of April. Are you understanding? So this price is out of picture. This price is old one. So which is the recent one, most appropriate? Price on which date? Date of exercising the option. So what is their benefit now? Shares having a market price of 950 are given to you at 250. How many shares you have acquired? 1000 shares. So what will be taxable value of perquisite? Taxable value of perquisite will be number of shares allotted multiply by, in the bracket, fair market value of shares on the date of exercising the option. From that I should deduct what? Amount recovered from employee. Can you help me out to find out the taxable value in this case? In our example, How many shares allotted? 1000 shares. Multiply by into the bracket. What is the fair market value of shares on the date of application? 950. What is the amount required for employee? 250. So what is taxable value of perquisite? 7 lakhs. Yes or no? But the point is, tax should be levied in which year? Tax should be levied in which year? Why year of taxability is important? Because if you look at this, date of announcement of scheme is falling in which year? Financial year 1920. Date of exercising the option is falling in the financial year 1920. But this date of allotment of shares is falling in the financial year 2021. So the point is, in which year tax should be levied? Should we levy the tax in the year 1920 or should we levy the tax in the year 2021? So answer is year of taxability. Year of taxability year of taxability is nothing but year of allotment. And what is the year of allotment in our case? 2021. What is that date? 15 April 20. Correct? Yes, is that very clear? So what is my formula for asserting the perquisite value? When the shares are allotted either free of cost or at concessional rate, taxable value of perquisite equals to number of shares allotted multiply by into the bracket fair market value of shares on the date of exercising the option minus amount required from employee. Is that very clear? Yes. Now refer to this question very quickly. Question number 9. Question number 9. Shall I proceed? Have you realized something? The example which I took, the numbers are same as question number 9. They are picked up from question number 9 only. Yes, so what is the answer for question number 9? Taxable value of perquisite? 7 lakhs. Taxable value of perquisite is 7 lakhs. Is that clear? Shall we proceed? So with this we have completed with section 17 to clause 6. Clause 4, clause 5, clause 6 are over. Clause 7 are already over. Yes or no? Do you want me to do stock taking? Shall we do stock taking? Page number 36, you can refer. Page number 36. Page number 36. See, 17 to clause 1 is over, 17 to clause 2 is over, 3 is pending, 4 is over, 5 is over, 6 is over, 7 is over, 7a is over. Now we need to move on to this 17 to clause 8. 17 to clause 8. What is 17 to clause 8? Fringe benefits as may be prescribed. Fringe benefits means small benefits. Fringe benefit means small benefits. So let's move on to this. Fringe benefits, value of fringe benefit or amenity as may be prescribed. Prescribed means government will issue the notification that is issued. It is already prescribed in rules only. So, in that first point we have interest-free loan, concessional loan. Value of perquisite in respect of interest-free loan or loan at concessional rate of interest. In this case, we are saying that you have taken a loan from employer. You have taken a loan from employer. Now you may think, if I have taken a loan, how it can be a perquisite? How it can be a perquisite? Loan is a liability. Yes, correct, loan is a liability. But if employer provides you loan and if it doesn't charge you any interest, then definitely there is a gain, na? There is a benefit. If employer doesn't charge you any interest, do you get interest-free loan from bank? No. So definitely there is a benefit. Or say for example, employer is charging only 2% per annum. So where do we get loans at 2% per annum? So we can say that yes, there is a benefit, yes, there is a perquisite when the employer has given you loan and he is not charging any interest. It is a interest-free loan. It is an interest-free loan, or employer is charging interest, but the rate of interest is very low as compared to the rate of interest charged by the banks. In that case, we say that there is a concessional loan given to you. So, here we will be discussing the tax treatment of the interest component. Whatever benefit is derived by you, it is nothing but an interest component. So that interest amount should be added to your income and tax should be levied. Are you understanding? Yes or no? Now, say for example, interest-free loan means employer is not charging you any interest. He has given you a loan, but he is not charging you any interest. In that case, definitely there is a benefit. But how much benefit, na? That we do not know. That we have to find out what is the rate of interest charged by the banks. Whatever is the rate of interest charged by the banks, na, that is the amount of benefit derived by you. Say for example, your employer, you have taken a loan of 5 lakh from employer, and employer is not charging any interest. What is the benefit derived by you? 5 lakh is not the benefit. 5 lakh is not an income. 5 lakh is a liability. You have to repay back that 5 lakh to your employer. But since employer is not charging you any interest on that 5 lakh, na, we have to ascertain the interest element. And that interest element will be added to your income. Now for ascertaining interest element, you should know the rate of interest. So we should take rate of interest. From where we should take the rate of interest? We should, for the purpose of comparison, we should take the rate of interest which is charged by banks. But in India we have so many banks. So we should take interest rate of which bank? That is the question. So government says you take the rate of interest of State Bank of India. You take the rate of interest of India's largest bank, that is State Bank of India. But State Bank of India also, the rate of interest will fluctuate throughout the year, it will not remain the same. As and when the RBI, Reserve Bank of India, increases or decreases the repo rate, consequently the rate of interest charged by State Bank of India for all types of loan will also change. So government says, you, for the purpose of comparison, you take the rate of interest charged by State Bank of India as prevalent on 1st April of the year. So what is your previous year? 2021. So what is the first day of the year? 1st April 20. So you take the rate of interest as charged by State Bank of India as on 1st April of the previous year, that is 1st April 20. Yes, have you understood this? Yes or no? For the purpose of comparison, you have to take rate of interest charged by which bank? State Bank of India. Of which date? 1st April of the year. 1st April of the year. Are you getting my voice? If yes, then why you are not responding? So, in case of interest-free loan, in rate of interest, you should take rate of interest charged by State Bank of India as on the first day of the relevant previous year. My voice is too low. My voice is low. No, na. I kept the volume at highest. Okay. So in case of interest-free loan, you have to take the rate of interest as charged by State Bank of India as on the 1st April of the relevant previous year. Concessional loan. What do you mean by concessional loan? Concessional loan means employer has given you loan and is charging some interest. For that, now, what you have to do? You have to compare the rate of interest charged by your employer with what is the rate of interest charged by State Bank of India of the same nature of loan. See, bank will offer you different loans: education loan, housing loan, car loan, personal loan. Every nature of loan will have a separate rate of interest. So what you have to do? Whatever nature of loan you have taken from your employer, for same nature of loan, what is the rate of interest SBI is charging on first day of the previous year, that you have to take for the purpose of comparison. Now say for example, you have taken a housing loan from your employer and employer is charging you 6% per annum interest. If you would have taken loan from State Bank of India, then they would have charged you 8.5%. Rate of interest charged by State Bank of India on 1st April 20 is 8.5%. Employer is charging you 6%. So what is the benefit derived by you? 2.5%. So you calculate interest on the amount of loan at the rate of 2.5%. So in case of concessional loan, rate of interest means rate of interest charged per annum by SBI as on the first day of the relevant previous year minus interest charged per annum by the employer. Minus interest charged per annum by the employer. Yes, have you understood this? Which rate of interest is required to be applied? Rate of interest charged by SBI as on the first day of the relevant previous year. Now we'll try to understand the provisions with respect to calculation. How to calculate interest, when it is taxable, when it is not taxable. So we are, for the purpose of understanding this provision, we are dividing the loan into two categories. Number one, if the loan is taken for medical treatment in respect of disease specified in Rule 3A. There is one Rule 3A. In that Rule 3A, list of disease is given. You are not required to refer to that disease. You need not remember also. I also don't remember. Cancer, tuberculosis, AIDS, heart disease, lung disease, kidney disease, all those things are written there in technical language. If you have taken loan from employer for the treatment of that disease, in that case, government will ask you a question: do you have any insurance policy, health insurance policy? If you have a health insurance policy, you will have a health insurance claim also. So you are saying that no, I don't have any health insurance policy, so I do not have any health insurance claim. You have taken a loan from employer for your medical treatment, and in future you are going to repay that loan. So you are saying that I do not have any health insurance policy. So I do not have any health insurance claim also. In that case, government says we will not levy you tax on any component. Interest component, we will not levy you any tax. Forget about it. Number one, you have fallen ill. Number two, you have taken a loan. Number three, there is no insurance also. So, government says we will not levy any tax. Forget about it. Second possibility, if there is a insurance claim. Now, I will take an example. To make you understand the concept. You tell me what you should do. For example, Ishwar was suffering from cancer. For treatment of cancer, cancer is a disease specified in Rule 3A. Ishwar was suffering from cancer. For treatment of cancer, he has taken a loan of 5 lakh from employer. And say, for example, it is a interest-free loan. Employer is not charging any interest to Ishwar. So, how much loan Ishwar has taken? Ishwar has taken a loan of 5 lakhs. For what? Treatment of cancer. Now, for example, we will ask Ishwar, do you have the insurance claim? He says, no, I don't have an insurance policy. So, no insurance claim. In that case, we say that taxable value of per quid is 0. Nil. Nothing is taxable. Second possibility, there is insurance claim. And what is rate of interest charged by employer? Rate of interest charged by employer is 0. Rate of interest charged by employer is 0. There is insurance claim. Say, for example, insurance claim equals to 2 lakhs. Now listen to the situation. Ishwar is suffering from cancer. For treatment of cancer, he has taken a loan of 5 lakh from employer. Employer is not charging any interest, but he is also having insurance policy. So he has taken 5 lakh from employer. He has got the treatment. He has paid 5 lakh to the hospital. Thereafter, whatever bills are there, those bills he is submitting to the health insurance company, and insurance company has granted a claim of 2 lakh rupees. In your opinion, what should Ishwar do? Should he keep this 2 lakh in his own pocket? Or should he utilize this 2 lakh for repaying the loan taken from employer? What should he do? Ideally, what he should do? Should he think that, no, my employer is not charging me any interest now. Why to worry? I will pay him later on. Let me keep this 2 lakh in bank as fixed deposit and earn some interest. Should he think in that manner? Or should he utilize this 2 lakh for repaying the loan of employer? So ideally, he should use this 2 lakh for repaying the loan of employer. But Ishwar has taken undue advantage of this situation. What he has done now, this 2 lakh which he has received from the insurance company as the insurance claim now, this 2 lakh he has kept in bank as fixed deposit and he is earning interest. And what about the loan of employer? Loan of employer is outstanding. Employer is not charging any interest now. So Ishwar says, I will pay after 2-3 years. So Ishwar is relaxed. And on this 2 lakh, he has kept a FD with bank and he is earning interest. Don't you feel in this case Ishwar is taking undue advantage of the situation? In that case, government says, if you try to take undue advantage of the situation, we will levy interest. We will levy tax on the amount of interest. What is the amount of insurance claim received? Insurance claim received is 2 lakhs. From that, how much amount was utilized to make the repayment of loan? Amount repaid to employer. How much amount is utilized for making the repayment of loan to employer? 0. So balance is 2 lakhs. Government says on this we will calculate interest. So for example, this loan was taken on say 1st April and the interest rate charged by SBI on 1st April is 10%. Then 2 lakh into 10 upon 100 into 12 upon 12. That is 20,000. 20,000 will be added as perquisite value in the income of Ishwar. Have you understood this calculation? Yes or no? This is one possibility. This is one possibility. What if Ishwar has utilized entire 2 lakh to repay the loan? Ishwar had taken a loan of how much from employer? 5 lakhs. He has taken a loan of 5 lakhs from employer. Rate is not fixed here. This rate, this 10% you have to take SBI rate. This will not remain same. It will change every year. Employer is not charging any interest. So you have to take SBI rate. If employer is charging any interest, then you compare the SBI rate and employer rate, find out the difference. This is SBI rate right now. Why? Because I told you that employer is not charging any interest. For example, if employer is charging interest of 4%, then 10% minus 4%, 6%. Do the calculation by 6%. Are you understanding? Yes? QC? While you log in, you should keep your name. How do I call you? By the instrument number? QCOMBTD. Okay. So another example, I took another example saying that Ishwar had taken a loan of 5 lakh for treatment of cancer. A claim of 2 lakh is granted by the insurance company, and that entire 2 lakh is used by Ishwar for repaying the loan of employer. In that, what amount he has kept in his own pocket is 0. In that case, government says we will not levy the tax because Ishwar has not taken any undue advantage of the situation. Is that very, very clear? So look at this formula. Taxable value of per quid equals to insurance claim received minus amount repaid to employer out of the insurance claim. Amount repaid to employer not from own pocket, amount repaid to employer from that insurance claim amount. Whatever is the balance, rate multiplied by ROI divided by 100 into period upon 12. ROI can be SBI rate if employer is not charging any interest, or ROI can be if employer is charging some interest, then ROI should be what? Difference between the SBI rate and the employer rate. Is that very clear? Yes. In period you have to take 12 months. But if say for example Ishwar has taken loan on 1st October, then he should take 6 upon 12 from October to 31st of March. Yes, shall I proceed further? Let's move on to right hand side. If the purpose of loan is other than medical treatment, if the purpose of loan is other than medical treatment, Then you see what is the amount of loan. Then you see what is the amount of loan. If the aggregate amount of loan taken by employee from the employer is less than or equal to 20,000, the loan amount is 20,000. If you want to take loan of 20 lakh, 50 lakh, 1 crore, etc. You have taken a loan also of small amount. Only 20,000 loan. So government says these are petty loans, small loans. Forget about it. We don't want to levy any tax. So taxable value of per quid is 0. Taxable value of per quid is 0. But if the aggregate amount of loan is more than 20,000, if the aggregate amount of loan is more than 20,000, in that case government says it is not a petty loan. We will calculate interest and that interest will be added to employee's income and tax will be levied on that interest also. For calculating interest, further you have to think whether the loan amount is remaining constant. Loan amount is constant throughout the year or loan amount is changing. What do you mean by loan amount is constant throughout the year? Means you have taken a loan and during the previous year you have not repaid anything. For example, you have taken a loan of 5 lakh from employer. Let me give you an example. You have taken a loan of 5 lakh from employer. So I am giving you number 1, amount of loan equal to 5 lakhs. Say for example, date of loan is 1st January 21. SBI rate of interest as on 1st April 20 is say 10% per annum. Rate of interest charged by employer is say 4% per annum. So in this case, how will you calculate the interest? You have utilized the employer's funds for how many months? January 21, February 21, March 21. Have you repaid anything during January, February and March? No. So in that case, I say that the amount of loan is constant throughout the year. It is not changing. In that case, taxable value of perquisite will be amount of loan multiplied by rate of interest divided by 100 into period upon 12. Hey, this is same old formula, yaar, school days formula, PNR by 100. You might have learned in your school days, PNR by 100. What is the amount of loan? 5 lakh. What you will take as rate of interest? Employer is charging 4%, SBI is charging 10%. You will take difference, 6%. 6 upon 100. Period will be what? 3 upon 12. Yes? What is the amount? 7,500. Yes or no? Have you understood this? Let me change the example now. Same example, I am changing it slightly. Same example with slight change. Amount repaid to employer is 20,000 at the end of each month. I don't have sufficient space. Amount of loan is 5 lakhs. Date of loan is 1st January 21. SBI rate of interest on 1st April 20 is how much? 10% per annum. What is the rate of interest charged by employer? The rate of interest by employer is how much? 4% per annum. And I am giving you some extra information. 20,000 per month is repaid to employer. 20,000 per month is repaid to employer at the end of each month. In that case, can I say that the loan amount is changing? If you repay, don't you feel your outstanding amount will change? If you don't repay, your outstanding amount will remain constant. But if you repay the loan, your outstanding amount will fall month after month. If you ask your employer to deduct, say for example, 20,000 from your salary at the end of every month, then the outstanding amount of loan will go on reducing by 20,000 every month. In that case, you have to calculate interest on a monthly basis. You have to calculate interest on a monthly basis. Now you tell me, for the month of January 21, how much amount of employer was lying in your pocket? Or how much funds belong to employer you were using? For the month of January 21, how much funds of employer you were using? Yes? At the end of every month you are repaying 20,000 now. What is the amount of loan you have taken? 5 lakhs. So at the end of January, you will be repaying 20,000. So during the month of January, how much funds of employer you have used? 5 lakhs, yes or no? Jaya Lakshmi madam, you took a loan of 5 lakhs on 1st January 21 and you decided, you agreed with an employer that you go on deducting 20,000 from my salary at the end of each month. So my question is, during the month of January, how much funds of employer were lying with you? 5 lakhs na? Oh, financial management subject you have not learned. During the month of February, how much amount of funds of employer were lying with you? At the end of January, you repaid 20,000. So what is lying with you in the month of February is how much? 4 lakh 80. What is lying with you in the month of March 21? 4 lakh 60. Logically, You should calculate interest for the month of January. See, whenever the loan is repaid now, we will do the calculation of interest on a monthly basis because the outstanding amount of loan is changing. So logically, we should calculate interest for the month of January 21 for on the amount of 5 lakh for one on the amount of 5 lakh for 1 month. We should calculate interest for the month of February on the amount of 4 lakh 80,000 for 1 month. We should calculate interest for the month of March 21 on the amount of 4 lakh 60 for 1 month. This is logical, but this is not lawful. This is logical, but this is not lawful because provision says you calculate interest on the amount on the outstanding amount of loan at the end of each month. Don't see how much funds you have used. You calculate interest on the outstanding amount of loan at the end of each month. So at the end of January, what is the outstanding amount of loan? 4 lakh 80. What is the outstanding amount of loan at the end of February? 4 lakh 60. What is the outstanding amount of loan at the end of March? 4 lakh 40. You calculate interest on this. See why na? This amount changes at the end of the month because your salary is becoming due at the end of the month and you asked your employer to deduct 20,000 from your salary. If your salary was becoming due on first day of next month, na, then the outstanding amount of loan at the end of January would not have been 480, it would have been 5 lakhs. Are you understanding? So you calculate monthly interest. 4 lakh 80,000 into what? SBI rate is 10%, employer is charging you 4%. So what is your benefit? 6%. So into 6 upon 100 into 1 upon 12. This will give you how much? 2,400. Yes, next is 2,300. And next is, after that, month of March. So this you have calculated monthly interest. Then you take up the total, 6,900. Have you understood this? Yes or no? Question number 10. Question number 10. X Limited has advanced a loan of 5 lakh to Mr. R, an employee, on 1st January 21. Interest rate of SBI on 1st April 20 is 1st April 20 and 1st January 21 is 10% and 9% respectively. What is the rate of interest on the date of loan is not relevant to us. What is relevant is rate of interest as appearing on 1st April of the year. Determine the taxable value of per quid in each of the following cases. Case A, X Limited is charging interest at 4% per annum and no repayment is made during the year. What is the answer? 5 lakh into 6 upon 100 into 3 upon 12, 7,500. Case B, X Limited is charging interest at 4% per annum and Mr. R has been regularly repaying the loan in installment of 20,000 per month at the end of each month. What is the answer? 6,900. Is that clear? Yes or no? If the insurance claim is less than the loan, Soumya is asking me, sir, if insurance claim is less than the loan, is it taxable? No, it is not taxable. If insurance claim is less than the loan, say for example, you have taken a loan of 5 lakh from employer and you got an insurance claim of 2 lakh. If you utilize that 2 lakh entirely for repaying the loan of employer, then the entire insurance claim is utilized for repaying the loan now. So what is lying in your pocket out of insurance claim is zero. Correct? And in case of loan taken for medical purpose, anyway we don't levy any tax. No perquisite value. Why we are levying tax on that interest component now? Because you took the undue advantage of the situation. Is that very, very clear? I want to share an alternative calculation with you. I want to share an alternative calculation with you. Look at this very carefully. First of all, have you understood this 6,900 calculation, everyone? Now, if the loan would have been taken in the month of April 2020, then what? This loan is taken in January 2021. If this loan would have been taken in the month of April 2020, then would you go on calculating for 12 months? Answer is yes. Can you follow some shortcut? Yes. What shortcut you can follow now? There are two shortcuts. Number one shortcut I am telling you, I am explaining you shortcut methodology to get the same amount of interest of 6,900. What you can do now? In your calculator you can add 480 plus 460 plus 440. Is how much? 480 plus 460 plus 440 is how much? 13 lakhs 60,000, right? So instead of doing calculation thrice, you can calculate on 13 lakh 60,000. 13 lakh 60,000 into 6 upon 100 into 1 by 12. That will give you same amount, 6,900. This one is also fine. You can do calculation in this manner. 13 lakh 80 it is. This is alternative calculation number one. One more alternative calculation. You take up the average amount. 480 plus 460 plus 440 divided by 3, average amount or a median amount. Median means amount which is there in the middle. What is that? 460 in our example into 6 upon 100 into 3 upon 12. This will also give you the same amount of 6,900. You can follow whatever you want. This shortcut methodology can be applied not in all situations. Shortcut methodology can be applied only in specific situation. When you know, when the repayment is done at a regular interval. When the repayment of loan, the amount repaid is also same and the interval at which it is repaid is also same. Then only you can apply the shortcut method. Otherwise, if you apply the shortcut method, now you will get the wrong answer. In our example, now repayment amount is same. It is 20,000 at the end of every month. Amount repaid is same now at the end of every month. That is what is being repaid is 20,000. And repayment is also done at a regular interval. That is 1 month only. Interval between two repayment now is 1 month. So if only these two conditions are fulfilled, now you can go for a shortcut method, otherwise not. Otherwise you have to calculate month wise. So if you get such question, And for entire 12 months, you have to do the calculation. If the repayment amount is same, interval is same, then you follow the shortcut method. Is that very, very clear? We are in which section? 17 to clause 8, fringe benefit as may be prescribed, interest free loan, concessional loan, point 1 is over. Now I don't want to get into second point because it is slightly requires more time and it requires more processing of information also. So we'll move on to your favorite point, very small point, your favorite point, free meal and refreshment. If you are doing a job and your employer provides you free meals, free refreshment, what will be the treatment? Free meal and refreshment is divided in two parts. Number one, free meal is provided. Meal includes number one, food, and number two, non-alcoholic beverages. Do you understand? Na? Curd, fruit juice, soft drinks, food and non-alcoholic beverages. And refreshment will include tea, coffee, snacks during office hours. If free refreshment is provided, tea, coffee, snacks, etc., taxable value of per quid is 0. Taxable value of per quid is 0, no tax. If food and non-alcoholic beverages provided, if they are provided at remote area, your job location is in some remote area. For example, people working in military, paramilitary forces, in some cases their job location is at very remote area. They cannot get the food also. So, food is provided to them in that remote area or offshore installation. Do you understand offshore installation? In the ocean, the oil company will install a machine called as oil rig. Oil rig, they will install the oil rig. Then that machine will get into that seabed and oil will be extracted. If an employee is provided free meal during office hours at such offshore installation, then perquisite value is 0, no tax. No tax. Second possibility is food is provided in office premises. What is provided? Food is provided. Where it is provided? It is provided in office premises. When it is provided during working hours. It is provided during working hours. So number one, food is provided in office premises during working hours. During working hours. Or second possibility, food is provided through non-transferable vouchers usable at eating joints. Food is provided through non-transferable vouchers usable at eating joints. Are you aware about Sodexo meal vouchers or ticket restaurant coupons? Lot of multinational companies, they give ticket restaurant coupons or Sodexo meal vouchers of 2000 rupees every month to their employees. Those Sodexo meal vouchers can be used in any hotel. It can be used even for purchase of grocery from the grocery shop. So if food is provided to you during office premises, during working hours, or instead of providing food, they have provided you meal vouchers. In that case, what will be the treatment? So government says, look at the amount of cost per meal. Look at the amount of cost per meal. If cost per meal is less than equal to 50 rupees, then taxable value of per quid is 0. If cost per meal is less than equal to 50 rupees, then taxable value of per quid is 0. See, here government is thinking whether you are eating to live or you are living to eat. If you are eating to live now, then government says no tax. If you are alive only for doing one thing, that is eating, then tax will be levied. The only objective of your life is to have good food, that's all. More food and good food, then tax will be levied. So government says if the cost per meal is less than equal to 50 rupees now, then you are not living to eat. You are eating to stay alive. In that case, we will not levy tax. But if cost per meal is more than 50, if cost per meal is more than 50, then you are alive only to do one thing, to eat. In that case, government says, first of all, you take what is the cost per meal incurred by employer. What is the cost per meal incurred by employer? From that, you deduct 50 rupees per meal. Up to 50 rupees, we will not levy any tax. So you deduct 50 rupees per meal. You also deduct if any amount is recovered from employee. Employer may recover some amount from employee. If some amount is recovered, you deduct that amount. Because, for example, employer has incurred 10,000 for you. Employer has spent 10,000 for you. And employer says, I have spent 10,000 for you, you give me 2,000 back. In that case, what is your benefit? Your benefit is only 8,000. Employer had spent 10,000 for your benefit, but at the same time he has recovered 2,000 from you. So your net benefit is only 8,000. This 10,000 is called as amount incurred by employer. This 10,000 is called as what? Amount incurred by employer. This 2,000 is called as amount recovered from employee. This 2,000 is called as what? Amount recovered from employee. And this 8,000 will be called as taxable value of perquisite. This 8,000 will be called as what? Taxable value of perquisite. This is the general formula for valuation of perquisite. This is the general formula for valuation of perquisite. This will be applicable in most of the situations. So taxable value of perquisite equals to amount incurred by employer minus amount recovered from employee. This formula would be applicable in most of the situations. What do you mean by special occasion? There is no separate treatment for any special occasion. No separate treatment is given. See, if you are on an official tour and food is provided, no tax. But here everyday food is provided to you, then only tax will be levied. For example, I am on an official visit and food is provided to me, then there is no personal advantage, no tax. So, if the cost per meal is more than 50 rupees, then first of all you take whatever cost is incurred by employer. From that you deduct 50 rupees flat exemption. Up to 50, government doesn't have the intention to levy the tax. So deduct 50. Also deduct amount recovered from employee. This will be given to in the question. If it is not given, it is 0. If it is not given, it is 0. Balance is taxable value of perquisite. If employer recovers something from you, your benefit is reduced to that extent. So deduct that amount. Have we understood this? Any other case? Any other case means anything which is not covered by point 1 and point 2 will be automatically covered by point 3. Anything which is not covered by point 1 and point 2 will be automatically covered by point 3. For example, food is provided after office hours. It is not provided during working hours. It is provided after working hours. Or maybe no alcoholic beverages are provided to you. In that case, you apply the general rule. What is general rule for valuation of perquisite? Amount incurred by employer minus amount recovered from employee, balance is taxable value of perquisite. Amount incurred by employer minus amount recovered from employee, balance is taxable value of perquisite. Yes, is that very clear? Yes or no? Or GST class today also got cancelled. Next, this is too small. Time pass will get completed in 2 minutes time maximum. Have you understood this free meal refreshment point? Yes. Okay, let's move on to this next point. Value of perquisite in respect of gift, voucher or token. Value of perquisite in respect of gift, voucher or token. You have received a gift from your employer. If you receive gift in cash, then it is totally taxable. Why na? If the gift in cash is exempted, then everyone would say that don't give me salary, give me gift only. If gift in cash is exempted, then everyone would, instead of taking salary, they would ask for gift only, saying that you give me gift every month. So gift in cash is totally taxable. Gift in cash will also include any voucher or a token which can be converted into money. Gift in cash, see, gift in cash will include what na? Number 1, it will include cash. Number 2, if you have received a gift check, do you understand gift check? You attended lectures na, face-to-face lectures. You saw na that day. I don't remember, second day or third day. At inside we had kept that felicitation program na, in that break. Do you remember? All those 12th standard students na, they appeared for examination, and whoever scored more than 90% marks, they were gifted na, gift check was given to them. That very big check na, it was a gift check. That gift check is also a gift in cash only. So, cash, gift check, account paycheck, or we can say money through bank. You have received money from your employer in the form of gift through bank account. Money through bank account. Or token. Token which is convertible into money. Token which is convertible into money. Means that token or voucher na, you can exchange with money. So if you are having voucher, you can give voucher and say that give us this much amount of money. Everything will be considered as gift in cash. It is fully taxable. Dikshit is asking me, sir, lunch, tiffin, refreshment allowance is different. See, Dikshit, in lunch, tiffin, refreshment allowance, na, employer is giving you money at the end, along with salary is giving you money. Along with salary, employer is giving you money, fixed amount of money. Whether you incur, uh, whether your food cost is more than that amount or less than that amount, employer is no way concerned with that. Along with salary, he is giving you fixed amount of money. That is allowance. Your employer is providing you food. You are having the best opportunity of your life in front of you. You can have any amount of food. If you are living to eat, then those would be the best days of your life. In your office, there will be a canteen. They will make food and that food will be available to you. So you can have as much food as you want. So allowance is different. In allowance, the employer is giving you money and that to a fixed amount. Here, he is not giving you money. He is giving you food. Next, gift voucher token in cash, totally taxable. Gift voucher token in kind. Either it is gift in kind, maybe on the occasion of Diwali, employer has given you sweets, 1 kg sweets. He has given you 1 kg packet Bengali sweets. Or maybe, say for example, employer has given you something else, free of cost. Then it can be considered as gift in kind. Whatever gift you have received throughout the year from the employer, you take up the total. You take up the total, aggregate. If the aggregate gift is less than equal to 5,000, no tax, totally exempt from tax. If the aggregate value of gift is less than equal to 5,000, no tax. It is totally exempt. If the aggregate value of gift is more than 5,000 then there are two opinions. The language is ambiguous. It is confusing language used by the law. Therefore, there are two opinions. Opinion 1, it is fully taxable. If the value of gift in kind is more than 5,000, it is fully taxable. And another opinion is, if the value of gift is more than 5,000, then amount exceeding 5,000 is taxable. For example, if you receive a gift in kind of say 15,000, then as per opinion 1, entire 15 is taxable, and as per opinion 2, 15 minus 5, only 10 is taxable. Which one is more beneficial? Second opinion is more beneficial. But the question is, which one we should follow in the examination? In the examination, we should follow which option? So while solving a practical question, you can follow second option, and at the end of the solution, you can give a alternative solution in the form of opinion 1. If this point is asked in the form of a practical question, in a practical question, this one point is asked as an adjustment. Then while solving the question, you follow second opinion, and at the end of solution, in the form of a note, you give an alternative opinion. That entire amount alternatively entire amount can also become taxable. This way, at the end of the solution, you write a note. At the end of solution, you write a note. Have you understood this? So this gift voucher token is over. You are not having GST class, so can we extend till 2:15? 10-15 minutes, can we extend? Do you have the capacity to absorb? Yes. Okay, let us proceed. Next point is credit card facility. Credit card facility. Say for example, employer has given you credit card facility. And if that credit card facility is given specifically for official purpose, means you can, whenever you are on an official visit now, whatever money you spend now, you spend out of that credit card. If that credit card facility is given for official purpose, there is no personal advantage to you. There is no personal advantage to you. In that case, nothing should become taxable. So we say that it is totally exempt from tax. But you have to prove now that it is incurred for official purpose. So government says following conditions should be fulfilled. First condition, government says complete details should be maintained. Government says complete details should be maintained. Who has to maintain the detail now? Employer has to maintain the detail. What detail he has to maintain? He has to maintain the detail with respect to date of expenditure, on which date expenditure was incurred, nature of expenditure, who had incurred the expenditure, name of employee, who had approved the expenditure, superior person who had approved the expenditure. So, date of expenditure, nature of expenditure, amount of expenditure, person who had incurred the expenditure, person who had approved the expenditure, all these details are required to be maintained by employer. And employer has to certify that the expenditure was incurred wholly and exclusively for the purpose of official duties. Employer has to certify, he has to issue a certificate. He has to issue a certificate saying that yes, following expenses were incurred for official purposes. In that case, we say that if two conditions are fulfilled, condition 1 and 2, then no tax. It is totally exempt from tax. Second possibility, employer has given you credit card facility, and if you have used that credit card for personal purpose, then yes, it will become taxable. How to ascertain the taxable value? You apply the general rule. What is our general rule for valuation of perquisite? Taxable value of perquisite equals to amount incurred by employer minus what? Amount recovered from employee. That same old rule. Whatever amount employer has incurred for your benefit, you take that amount, from that you deduct whatever amount employer has recovered from you, because to that extent your benefit is reduced. So taxable value of perquisite is amount incurred by employer minus amount recovered from employee. Credit card facility. Next is club facility. Next is club facility. Club facility also you have to find out for what purpose it is given. You have to find out for what purpose that club facility is given to you. Possibility number 1, club facility is given for official purpose. If it is given for official purpose, nothing is taxable. Any of the perquisite given for official purpose, there is no personal advantage, nothing can be taxed. So we say that club facility given for official purpose is totally exempt from tax provided certain conditions are fulfilled. Do you understand na club facility? Club facility will include health club facility, sports club facility. Dixit is asking me, sir, how can club facility be used for official purposes? See, there are very less number of possibilities. For example, your employer always keeps an official meeting in the club only. For example, Reliance Industries Limited has provided a card to every employee who is working at the position of vice president and above, a club facility card is given to them. All the official meetings are happening in that club only. In that case, at the end of every meeting also, free lunch you can have. In the club, you have lunch facility, etc. So all the official meetings would take place in that club only. In that case, we say that club facility is given for official purpose. Another possibility can be, for example, you are working for an event management company. You are working for a event management company and you are working at the position of business development officer. So what is your job? You have to get business for the company, na? You are working for an event management company, you are working at a designation of business development officer. So you have to get business for the company. Now who will give you a contract for event management? A poor person will not give you a contract for event management, na? A person who is very rich, he doesn't have time to manage his event, will give you a contract for event management. Where you will find out those people? Where you will find out those people, rich people? Will you find out in traveling them in trains, local trains? You can easily find out them if you go to some clubs, na? So, club facility will be given to you, club card will be given to you. You go into that club and you do friendship with those people who are coming there and you share your business card with them, saying that we are so and so event management company, we can manage your social and official events at a very reasonable cost. You go to that club, share your business card with them and get the business. In that case, we say that the club facility is given to you for official purposes. So if the club facility is given for official purpose, we will not levy any tax. Totally exempt from tax, provided three conditions are fulfilled. Two conditions are copied from credit card facility, same to same. So first condition copied from credit card facility says that complete details in respect of such expenditure are maintained by employer, like date of expenditure, nature of expenditure, business expediency of the expenditure. Business expediency means you should prove that yes, this was incurred for business purpose. Number two, certificate is issued by employer. Certificate is issued by employer saying that yes, this expenditure was exclusively incurred for performance of official duty. These two conditions are same as credit card facility. The third condition is slightly different. Third condition says if that expenditure is an entertainment expenditure, if employee has incurred the expenditure in the nature of entertainment expenditure, then if employee claims that this entertainment expenditure was incurred for official purpose, then you have to maintain extra details like what is the nature of entertainment done. Means say for example, it is a DJ club. So whenever you go there will be music going on, DJ party going on. So you can dance on the floor. So you have to maintain the records with respect to what is the details of such entertainment and what nature of entertainment. Number two, person entertained. And number three, business expediency of such entertainment. For example, you are having the card of the club and you have taken your customers to the club. You have taken your suppliers to the club. Free DJ party they are enjoying. So business expediency is proved because the person who was entertained is either your supplier or your customer or some way associated with your business. In that case, we say that if these three conditions are fulfilled, then club facility provided for official purpose is not taxable at all. Last part. This is last point and last part. Personal purpose. If the club facility is given for personal purpose, then we will ask you to see the nature of club. If it is health club or sports club, health club means it can be a yoga club wherein you are being taught yoga, or it can be sports club, or it can be a gymnasium, etc. So if it is a health club or sports club facility and this is provided uniformly to all employees, then perquisite value will be zero, no tax. Because if you are healthy now, you can work more, you can work efficiently. Therefore, government says no tax. Anything related to health, no tax. Any other club facility. Any other club means other than health club, other than sports club. For example, it is a DJ club, party club, music and dance will go on. In that case, we say it is any other club facility. Club membership can be two types of membership. It can be a corporate membership or individual membership. Corporate membership means your employer has taken the membership. Your company is the member of the club. In that case, at the time of taking the membership, they might have given some initial deposit. Some deposit is required to be given. That initial deposit is refundable when you cancel the membership. When you surrender the membership, that initial deposit is refundable. On that initial deposit, tax should not be levied. On initial deposit, tax should not be levied. Tax should be levied only on recurring expenses incurred at the club. Tax should be levied only on recurring expenses incurred at the club. What can be recurring expenses? You went in that music party, you went in that DJ party, entry fees is 800 rupees. So that DJ party entry fees is a recurring expense. You had dinner at the club. That dinner cost is a recurring expense. And second possibility is individual membership. Means your company has not taken the membership of the club. You have taken the membership of the club. Individually, you are the member of the club. In that case, in both cases, if employer has taken the membership of the club, then this recurring expenses. And if you have taken the membership of the club, in both cases, perquisite valuation rules is same. Perquisite valuation rules are same. Apply the general rule. What is general rule? Taxable value of perquisite equals to amount incurred by employer minus amount recovered from employee. Taxable value of perquisite equals to amount incurred by employer minus amount recovered from employee. Yes, is that very clear? Yes or no? So we have completed this club facility. Last point for today. We have completed this club facility. Section 17, subsection 2, clause 8, our discussion is going on. We started with 17 to clause 8. Interest-free loan, concessional loan is over. Free meal refreshment is over. Gift is over. Credit card facility, club facility is over.